side, they can happen quite quickly. And that means that one needs to keep an eye on how much leverage there is among various commercial real estate companies. And one effect that we have seen already is the bond market, because it's much more expensive to issue bonds today for among commercial real estate companies compared to the situation, let's say, a year and a half ago or something like that. And that means that essentially some of that funding is moving into the banks. And I think that one actually has to expect some kind of restructuring in the real estate, commercial real estate market over the coming year or so, because as always, when the tide goes out, and there is too much leverage somewhere, you're going to have to pay for that. But that wouldn't be all that bad.
Yeah,
that wouldn't be.
That's not too that bad. But at what point would you be worried about that? At what point could that feed back into making the monetary policy decisions that you're making change?
Well, I've been in this business for too long to sort of pin down numbers. You know, when you get to that point, you just deal with it as best as you can. And we have tried our best in our financial stability report to go through sort of all the technical details when it comes to looking at this. But when it comes to commercial real estate, as long as the economy as a whole holds up reasonably well, it should be possible for real estate companies to kind of manage the situation that we are in. But of course, if you would end up in a situation where a downturn lasts for years and years, that would be a very different environment.
Just finally, and as you say, you've been doing this for a while. This is your final meeting. As you look back over the last few years, what lessons have you learned? We now have an inflationary problem that is gripping the world. Did central banks apply too much stimulus, for instance, during the pandemic? How much responsibility do you think central banks have for the inflation that we are now experiencing?
I think that the economic consequences of the pandemic were actually handled quite well. And now, after the pandemic, people have all sorts of views on what was done back then. But keep in mind that when all these things happened and when all these decisions were made, then there was no way of knowing for how long the pandemic would last. And the focus was on avoiding the economic consequences of the pandemic and also ensuring that the pandemic did not turn itself into a financial crisis. So all of that is well and fine. But then we and probably many others assumed that things would normalize. Little did we know that we would end up with all these sort of global supply issues, and we simply had no idea when it comes to adding a war to our projections. And then, you know, with hindsight, we are where we are, and then we have to deal with that as best as we can. But my view is that it was absolutely necessary to do what we did when we went into the pandemic. And in many different parts of the world, the economic consequences of the pandemic have been much less severe compared to if we just had been sitting there with our arms crossed. Then when the world changes, we will have to change. That's just reality of life.
Yep, when the facts change. Governor, it's always been a great pleasure speaking with you. Thank you very much for all of your time, not just today, but throughout your tenure as Governor of the Riksbank. It's been a great pleasure and an honor to speak with you. Thank you very much indeed. The Riksbank Governor, Stefan Ingves. Thank you, sir. Coming up, the Thanksgiving travel rush is back. More people are traveling through US airports this year than before the pandemic. We're going to discuss how consumers are managing higher prices with Brian Kelly. He is the founder of The Points Guy. This is Bloomberg.
Activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
So, the Thanksgiving travel rush is back. According to the TSA, more people are traveling through US airports in the pre-holiday period than in 2019. The roads are set to be just as busy. The Motor Club Federation, AAA, says this year is the third busiest Thanksgiving travel year since 2000. Here to discuss, Brian Kelly, founder, of course, of the travel website, The Points Guy. Brian, great to have you on the show. Everybody wants to get out there. They want to go and see friends and family. But it's really expensive. Just how expensive is it this year?
It's crazy expensive. We're seeing airfares about 35% year over year in a lot of markets. People are now having to choose, when to take their trips. And one of the key trends we've seen, Americans are now traveling abroad for the holidays because of the strong U.S. dollar. So, but the appetite and demand is still there. And we're seeing with the retailers quarterly reporting that people are buying less things, but still very bullish on travel.
So what's the advice? If you're thinking, I haven't gone to see friends and family for Thanksgiving, but I quite fancy it at Christmas, have I left it too late already?
No, I would book now, though. Procrastination is not your friends these days. Flights are completely selling out. That's what a lot of travelers are running into. So book as far in advance as possible. And in order to get the cheapest fare, I use Google Flights. It allows you to search for different airports. Even switching your day by a single day can help dramatically bring down the price. You can also set alerts so that when the airfares do drop, because the airlines use algorithms, they change fares many times a day. There's not one certain time to go and get the cheap fare. So you've got to be nimble and act quick when you see something that's a good fare.
There's plenty of other websites out there, and it's interesting to kind of compare and contrast. How do I beat the algorithm, Brian? Honestly, this is genuinely a conversation I have with my wife. How do you beat the algorithm when you're booking holidays? Do you use a VPN? How do you make this work?
The VPN thing is a little bit overblown, in my opinion. I would just use data. There are sites out there like Hopper. They analyze billions of fares, historical, and set alerts. And a lot of times, I recommend use your frequent flyer miles. United just got rid of the fee to cancel your frequent flyer mile tickets. So this is what I always recommend. Book something with your miles. And then if you see a really cheap airfare come up, you can cancel the miles reservation and then rebook it at the cheap paid fare. So you've got to stay ahead of the pack and, and jump when you see something that's good.
Is it just the flights or is it everything else? Like a lot of people are going to drive.
Hotels are crazy expensive, especially as we look forward into 2023, those school holidays. People are seeing, those trips to Florida they used to take are now double and even triple the price. Plus, remember, with hotels, you're still not getting full services. You may not get that housekeeping and room service. So, I recommend to consumers, make sure you know what amenities are included. And a lot of hotels have these bogus resort fees that charge you for things that should come included. I always recommend disputing them at checkout. A lot of times you can even just message the hotel through their app and say, hey, look, these resort fees are crazy and I didn't even get all the perks.
Final point, you mentioned the fact that people are traveling internationally. We don't celebrate Thanksgiving over here. In terms of this being a good time to travel, how good is it vis-a-vis traveling in the United States?
Oh, it's a great time. So many of my friends are in Europe right now, especially because the U.S. dollar is at record highs against, the euro, the pound. And they're, Fly Norse is the cheap, that replaced Norwegian Airlines. So there's a lot of budget tickets now to Europe. And frankly, it's cheaper to go to Europe than it is most places in the United States.
Brian, great to catch up. Enjoy the rest of Thanksgiving. We really appreciate the time. Thank you very much. Brian Kelly, founder of The Points Guy. If you're still in the States, if you're still in New York, of course, you can have the Macy's Thanksgiving Parade to enjoy. It is ongoing. These are live shots coming to you from New York. The parade looks fantastic. The weather looks amazing. This is Bloomberg.
Fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
So as we've been discussing, EU energy ministers are meeting today in Brussels to talk about the crisis in the region. They're talking about a gas price cap. They're talking about an oil price cap. Let's deal with the details of what is happening here. Let's get back to Bloomberg's Maria Tadeo, who is standing by with one official who's been very much at the center of this debate, particularly on the gas price cap story. Maria, over to you.
Look, she has been at the center of action here. And of course, we're talking about the Spanish Energy Minister and Deputy Prime Minister Teresa Rivera. She's joining us exclusively on Bloomberg. Thank you so much for your time. And here we are, another meeting and no breakthrough. What happens next?
I think that it has been a very productive and interesting meeting, but I think that it was important to rebalance a little bit the whole set of pieces that we need to put in place in a balanced way. So we are talking about the solidarity mechanism dealing with gas and a joint purchase mechanism. We are talking about how to speed up the permitting process for the full deployment of renewable energy solutions, so to lower our dependency of gas and other fossil fuel solutions. And there was something that was missing, this very important signal to the markets and traders. Of course, we need gas, but we cannot be sold at any price. So it was important to provide some inputs on how we can send this signal to the traders. And for the time being, the proposal of the Commission was not sufficiently effective.
And what I like about you is that you're very straight to the point, and to some extent, you call it as it is, the way you see it. And you said at 275 euros megawatt hour for 2 weeks, that is not a real cap. Fundamentally, what is your problem with this proposal put forward by the Commission, which you clearly don't like?
Well, I think that the Commission was trying to identify what is that threshold that we do not want to achieve at any point, but it may create an incentive to align the current prices upwards, and that was not an effective way to address the current energy prices crisis. And at the same time, we think that it was important to send this message to traders. We are in a position to buy a little bit more expensive, to pay a little bit more than in other marketplaces of gas in the rest of the world. But we are not going to accept gas at whatever price, as it was the case in the summer.
So what is the price you could live with? There has also been an idea about a floating cap that could move within a range. What's acceptable to you as a price?
That's the way market works. So I think it could be much more accurate to establish a mechanism that provides a dynamic reference. So taking into consideration the different price references in the different marketplaces, the Henry Hub, the Asian markets, with a premium, because we want to be attractive, but not to fix a figure that may not be aligned to the way the different gas prices flow in the different markets.
And I have to ask you, come December 13th, what figure do you want to see? What number? Ultimately, we'll come down to a number. What is it?
Well, I would like to see this dynamic solution.
Which potentially involves a range of prices, but I guess that's something that still needs to be worked. So that takes me to my other question. Some argue that, in fact, the problem is the Commission has come up with a plan that is not a price cap. They've done everything they can to avoid triggering this. Would you say, and I know this is controversial, but is there a bias, perhaps, in favor of Germany and countries that do not want a price cap by the Commission, which should be neutral to everyone?
Well, I think that the Commission cannot avoid or leave in a corner the demand of 50 member states. And I think that it has been very brave, and it is very important that we already count on a proposal that we can work on, that we can craft, and keep this balanced approach to the different set of tools that we need to deal with this difficult situation.
And you mentioned 15 countries, and that's essentially what a lot of people interpret. You have 15, potentially 17, and yet we're not there on this price cap. There has been some powerful language today, some saying this is not a serious proposal, it's a joke, it's a bit of a mockery. How would you describe it yourself?
I think that it has been a very constructive discussion. And I think that it has been positive. Everybody has understood the concerns of the others, and everybody has thanked the presidency, the Czech presidency, for providing the solution. Let's work in the contents. Let's understand that we need a deal, a political commitment to the 3 pieces of legislation, and let's try to have this conversation all together the 13th of December. And I think that it will work. Nobody has been opposing to this solution, and I think that we all understand that it is very important to stay united and to take this situation as an opportunity to build much more Europe, a much more united response to this crisis, stating and underlying the importance of flexibility, solidarity, but EU-wide measures.
And you've said 2 times already, this is a package that has 3 points. In your perspective, is it everything or nothing? Everything has to be agreed, including the price cap, for it to be agreed in December. This is a whole unit.
I don't foresee any perspective that could put at risk this approach. I think that everybody understands that there are concerns and that there are interlinkages between the different pieces. We cannot think about this compulsory obligation of solidarity to provide gas to other countries if we cannot count on a reference on how prices are going to be crafted. And of course, we need to lower our dependence of gas and fossil fuel fuels by a quick deployment of renewable energy. But the three aspects need to be combined, and I'm sure that we will manage to get this consensus.
And Minister, you have been super vocal about the Green Deal. You are a supporter of it, but you also know there's some out there who say, let's get real. The only way to end this crisis is long duration contracts, and that will clash with the Green Deal, but we're in an emergency. Let's do it. What's your opinion on this? Are we going to see this massive contracts like China did 2 days ago with Qatar?
I think long-lasting contracts may be 10 years, but we need to be consistent with the deep crisis that the climate emergency could mean in case we do not respond. And I think that we have serious data. We have already lived serious effects of the climate impact. So we need to be consistent, and the serious response is much more connected to a deep and accelerated transformation of our energy system that link it to long-term contracts on gas, oil, and other fossil fuels.
So you say accelerate the Green Deal, do not go long duration. There's no need for that, or at least you don't support it. That's basically what you say.
Absolutely. Taking into consideration biodiversity too, we cannot kill our biodiversity.
And I want to ask you, Spain, for some, it's a country that has gotten this right, or at least was able to see the problem before anyone else. You were calling for this joint purchase. You have your Iberian, of course, mechanism that lowers the price in Iberia. I wonder, is it the time perhaps in Europe that we listen less to some of the northern countries and perhaps be more neutral in some of the ideas? There has been always this idea that the southern Europeans don't know what they're doing. In your view, have you proven them wrong? Do you feel validated?
Well, I think that we have proven being wrong when dealing with this energy crisis. I think that there are many strengths.
The whole European Union?
No, I think that the European Union needs to combine the different strengths. And I think that in this point in time, we can provide many solutions that we have been building along the years. And it is good to pay attention to what others do and to create something that makes sense in the mid and long term. And probably the whole understanding of the energy policy was too biased towards the Eastern European countries and to the cheap gas being imported from Russia. And this creates a vulnerability that needs to be solved. But I think that the point in time right now is not to identify who to blame for, but how we can work together. I think that this is a very important lesson that we Europeans have learned from the previous crisis. So I'm not going to complain, but I think that we need to do things in a way that do not create additional tensions to those that are in a position to accelerate the energy transition. That's our limit, not to be imposed things that do not make sense in the long-term understanding of the transformation of.
And of course, that's a reference to Spain investing massively in renewables. I have two very brief questions. We're running out of time, but first of all, do you predict that the Iberian mechanism that lowers and separates the electricity price from the gas will be extended next year? And then secondly, do you see yourself becoming the new hub for energy? You say we're switching from east to the south. Can you beat other countries, Italy, France, on this?
There are two things in this point. The first of them is that the Iberian mechanism has proven to be very effective. Probably it's not as effective as it has been in our countries as it could be in other countries where the share of fossil fuel-related electricity is still very high because the average price cannot benefit from the lower price of renewable energy or other low-carbon solutions that are more stable, predictable, and affordable energy solutions. So yes, I think that it should stay, but I think that it is still a question mark how it can be expanded elsewhere.
But for Spain, yes.
For Spain, I think that it has proven to be effective, and I think that it could be wise to see how we can extend this mechanism. Then I have the second question on whether we, southern countries, may be the new battery for Europe. And it is very curious because we see that in the new geopolitics of energy, sun and wind counts. It's not anymore only oil, gas, and coal. So probably the whole geography of energy is changing. And it is wind offshore, it is land, inland, offshore, inland wind, photovoltaics, and we try to do our best so to provide solutions and to develop things that are not still ruled out, such as the storage of electricity.
Well, Minister, thank you so much for your time here. And it's always interesting to see how the balance of power has changed as a result of this war in Ukraine. Some of the energy hubs potentially changing from the east to the south. It does open an interesting conversation. Guy?
Absolutely it does, Maria. I thought that conversation encapsulated all of the challenges that Europe faces right now. That north-south divide, I think, is absolutely huge. But the issue of longer-term contracts, we talk about a price cap. Longer-term contracts could also cap the price as well, but the duration of those contracts remains a huge issue. Maria, fantastic work. Thank you very much indeed. Bloomberg's Maria Tadeo joining us on the energy challenges ahead. Still ahead on this program, fears of contagion after the fall of FTX. Binance's CEO weighing in. Our exclusive conversation with him next. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
We're in the early stages of a sustainability revolution that has the magnitude of the industrial revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Keeping you up to date with news from around the world, here is the First Word News. I'm Guy Johnson. Ukraine has restored electricity and other vital services to some areas, but most of the capital and other parts of the country are still without electricity, and it is bitterly cold. This after another wave of Russian missiles that targeted civilian infrastructure. The European Council President, Charles Michel, will travel to Beijing next week to meet with China's President Xi Jinping. The EU has been struggling with how to treat China while the United States presses for a tougher approach. The EU's relationship with China has been strained by Xi's ties to Russia and China's refusal to condemn the invasion of Ukraine. In the UK, Transport Secretary Mark Harper will meet with Labour leaders in the coming days to try and diffuse the threat of further rail strikes. The Rail Workers Union has set out 8 more days of stoppages in the run-up to Christmas and in the new year. Unions are demanding pay hikes that keep pace with inflation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Guy Johnson. This is Bloomberg. So let's talk more about what's happening with the central bank story. We heard from Governor Ingves at the top of the hour. The Bank of England's Deputy Governor, Dave Ramsden, also speaking today. He wants to keep raising rates in the UK to bring inflation down, even if that means more pain for households.
However challenging the short-term consequences might be for the UK economy, the MPC must take the necessary steps in terms of monetary policy to return inflation to achieve the 2% target sustainably in the medium term.
Dave Ramsden talking a little bit earlier at the Watchers Conference the Bank of England has been holding today. Joining us now to talk about this, and I think we need to fold the Fed into this conversation as well, is Mark Anderson, UBS's co-head of global asset allocation. UBS just releasing their year-ahead report. Let's talk a little bit, Mark, about what is happening with the central bank story. The Fed minutes yesterday seem to indicate a significant downshift from the Fed. We're going to a 50 basis point world now. We're moving away from that 75 basis point kind of extreme hiking zone that we were in a while ago. How should we think about this? And are we thinking about this incorrectly? A lot of people seem to be positioning this as the beginning of the pivot, or as I'm calling it, the pre-pivot. Are we a little advanced in our thinking if we're thinking in those terms?
I certainly love that pivot comment in many ways, because I think you're right that this move from 75 to 50 basis points is something that has gotten the market very excited. We're up more than 10% on major equity markets on this pre-pivot in many ways. But I think Powell, he was instructing us a few weeks ago at the Q&A at the press conference following the FOMC meeting, essentially telling us that there's really three things we need to look at. Is not only the pace of hikes, it's really how long they will be hiking. And to that note, and also in the minutes from yesterday, we note that there is a lot of uncertainty around exactly when we're going to get the inflation numbers that will allow the Fed to stop hiking. That would be probably a more important point to look at. And even more importantly, the third point, which is when they might be starting to cut. So I do think it's a pre-pivot. I do think it's a little bit premature for the markets to start celebrating. And as we learned from the BOE today, there will be more pain coming for the economy.
So let's talk about how the equity markets have been positioned. Let's focus first on Europe. There's a whole bunch of European markets, Mark, that are now up 20% plus off their lows. What do you make of that rally?
I think in many ways we just saw some bombed out valuation when it comes to some of the European markets, be it at both UK, if we extend that into kind of a broader European perspective, but also kind of Eurozone as a whole. So we were trading down at 9 times earning in the UK, 10, 11 times price earnings ratios in Europe. So that was really where we were starting to say that really the worst that we could imagine was starting to be priced in. Very different from a US equity market that is trading at 17 times earnings with a very, very bleak earnings outlook as well. So I think it was simply a drop, very, very cheap valuations that were starting to lure investors back in, despite the recession that we are looking into.
Do you think we get back down to those lows, or do you think those lows are now in?
I think we're quite close in terms of valuation levels when we're looking at kind of the multiples, to say around this kind of 9, 10, 11 times earnings that a lot of companies are trading on around Europe. But what's probably not yet in the price for some of the market is certainly the downturn we're going to see on the earnings front. So if we look at some of the major markets, we are still having expectations out there from bottom-up analysts of a slightly mid-single digit kind of upside turning into 23. And as we're looking into not only a recession in Europe from our perspective, but in the US as well, with input prices still on the rise, with interest rates moving up, so borrowing costs are higher, wage costs are still not under pressure, commodity prices are high. That's a period where margins will be under pressure. And if we want to be looking at more defensive sectors around healthcare, be it value around energy and the like, where we still see significant upside to markets.
Okay, so there's still significant upside there. But more broadly, when it comes to equities, are equities the right place to be? I hear a lot of people, strategists, analysts, talking about the idea that the sequence you want to be thinking about is, if you're in cash right now, you move out of cash into treasuries, you then move potentially into IG credit, top end of IG credit, before you even think about putting money back to work in equities. Is that the right way of thinking about it?
I think the interesting thing is that all of a sudden we have bond yields competing with the potential return of equity. So if we're looking at US dollar investment grade, we're looking at 5 to 6% yields. We do think that that's very attractive. It's something that we have an extra allocation to in our portfolios for UBS wealth management clients at this point in time. if we compare it to long-term returns on U.S. equities as an example, that probably sits around 7-8% in our view. So a little bit of a premium, but not very attractive compared to the headwinds that we're moving into. And we do think that if we were to see a recession now in places like the US, which is what we're forecasting, so a relatively shallow recession, but if we were to see that, we'd certainly be expecting to see these earnings numbers coming down. Still, equity markets mid-year on the S&P 500, we're seeing it down to 3,700 before ending the year 2023 at around the level of 4,000, so relatively flat from current levels. And if we're looking at, again, this U.S. investment grade, the long duration, the safe credit, it's a relatively safe yield that we can bang in at this point in time.
Mark, final question. We're seeing a liquidity crisis ripping through the crypto world right now. Are we going to see similar crises elsewhere? Private assets, real estate, etc. I was just talking to the governor of the Riksbank. He was highlighting the fact that we are going to see a kind of repricing of the commercial real estate market in his country. How many more of these kinds of liquidity events do you think we're going to see?
I certainly think that we saw a lot of the risk asset kind of correction in crypto that we probably would have been expecting in a year where broad markets are under pressure. But I think the next shoe to drop is certainly around real estate. So there I'm very much siding with the Riksbank governor that we had on your show just earlier. And I think he mentioned commercial real estate. I certainly think that that residential real estate as well, in particular in countries such as Sweden, where you have a large part of the mortgages linked to short-term interest rates. So there we're definitely going to see some negative spillovers. There's going to be other countries as well that have this tendency for shorter-term rate mortgages, be it in the UK, Canada, Australia, and that's certainly going to have both the negative ramifications for real estate prices, but also when it comes to consumption, where we'd see some negative spillovers, as we heard on your show here earlier on that point.
Mark, great to catch up. Really appreciate your time as ever. Thank you very much indeed. Mark Anderson, UBS is co-head of Global Asset Allocation. Really appreciate it. Okay, plenty more still to come. We need to talk about what's happening in the crypto world in a little bit more detail. As I say, that's still to come. This is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
So today, it is Thanksgiving. The United States is closed. Volume is therefore epically light. When you take the US out, you take a lot of volume out, and you're certainly seeing that this afternoon here in Europe. I'm not sure, therefore, how good the price signals that we're getting from markets today are really and how useful they are. Equities, though, broadly are on the front foot. You've got a stock 600 that's now trading at 440. We're up by around 0.5%. You're seeing every single sector in positive territory. But what you are seeing are the most rate-sensitive sectors doing the best. So real estate is having a very good day today. This basically on the back of the Fed minutes that we saw yesterday. The downshift to a 50 basis point world seems to be well received from the real estate market, but you've got utilities doing well as well. The dollar is on the back foot, though. That is where we are certainly seeing the weakness. We've got 121.43, got a 121 handle. Look at that. Absolutely amazing. We're up by 0.7%. You're also seeing big gains coming through for the yen and the euro. The German 10-year, as you can see, we've got a bid on the German 10-year. Yields are coming a little bit lower. We also saw some IFO data out today, kind of confirming the PMI numbers that we saw yesterday, basically suggesting that maybe actually the downturn that we're going to see in Europe this winter may be a little shallower than originally anticipated. I want to just quickly show you what's happening in the commodity market as well. Brent continues to soften up. Got an 84.75 handle there. Keep an eye on that. Keep an eye on what's coming out of Brussels in terms of the price cap. Natural gas is down on the Dutch contract by 4.5%. Again, watch that cap story. I don't think it's going anywhere really on the natural gas front. And then there's the big story. This is what kind of the epicenter of it all. The Bloomberg Dollar Index down by 0.3%. We're going to be talking about all of this in the next hour. Sebastian Radler, Bank of America head of European Equity Strategy, is going to be joining us. Looking forward to this conversation. It's coming up next. This is Bloomberg.
Expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Thursday, November the 24th. Thanksgiving in the United States. European equities are generally well bid. The London market a little bit of a laggard today, but volume is epically light. The US is out. The price signal, therefore, not that good from European equity markets today, but there's a positive signal coming from the Fed, and we like that. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So, as I say, we're counting you down to the close. European equity markets are positive. 441 is the number. We're up by around 0.5%. Every single sector is in positive territory. You are seeing real estate doing the best. It is the most rate sensitive, and it's basically feeding off the Fed story today. The Bloomberg Dollar Index is, though, I think the real narrative that you want to watch out for. We have seen that dipping. We're down by around 0.3%. The dollar has been rolling over. The Fed gave it a little push yesterday. You've got the cable rate trading at 121. You've got euro dollar, kind of 104, 105. This has a big impact on the terms of trade here in Europe. But how sustainable it is, we will wait and see. The other factor as well we've got to bear in mind in all of this is what's happening with Brent crude. Again, some negative news coming through there. We're trading at 84.87. We're watching the news to come out of Brussels, maybe on the Russian cap. But we've also got the China story to factor in here as well. You are seeing COVID cases really rocketing right now. Are we going to go back to COVID zero? Are we going to go back to harsh lockdowns? That would obviously have a big impact in terms of the demand for crude coming from that part of the world. But the worsening energy crisis, a sharp economic slump, and rising interest rates could certainly put the German financial system under considerable pressure. And this is the narrative we're trying to work with. That was the story that we got a little bit earlier on, according to the Bundesbank's newly published 22 Financial Stability Review. The central bank's vice president, Claudia Busch, spoke to Bloomberg TV.
I think the current situation is different. I think the COVID shock was a more temporary shock than this combination of shocks that we're currently having. The energy crisis, geopolitical risks have increased. We have to deal with the climate crisis. So I think this is different. It's more structural, and I would expect more structural change in the real economy. And I mean, we all know that structural change in the real economy also means an increase in corporate insolvencies.
The risks are coming. I think that's the message that we're getting from the Bundesbank. Sebastian Redler, Bank of America, head of European equity strategy, joining me now on set. Sebastian, I have a very simple question for you. Why are European equity markets doing as well as they are, given the economic backdrop that we are looking like we're going into?
Yeah, I think a lot of people are scratching their heads. And the answer is that all the nice stuff that you could hope for, you're getting right now. But there is a darker story that's waiting afterwards. What are you getting right now? Lower real bond yields. That's a lower discount rate for equities. That's nice. So the multiple has come up from 10 times to 12 times. And at the moment, output growth, so the actual activity in the economy is extremely strong. Look at the US, for instance. Output growth was running at -2% over the summer. Remember, it was recession fears, high yield credit spreads were at 600 basis points. You've gone from -2 to +4. That's a 600 basis points acceleration. But the key question for the market is now, is that sustainable?
This is supply chains normalizing, right?
Exactly. That's exactly it. You had a large order backlog that you couldn't satisfy. Now supply chain stress is coming down, so you're working through that order backlog. But if you look forward, what are your new orders doing? They are basically moving lower very, very quickly in response to the aggressive monetary tightening that is now feeding into the system.
Where does that affect the most? Is it Europe, where the PMIs have actually been quite grim for quite some time? And actually, I looked at the data yesterday and saw a shallower recession maybe coming. The IFO data may be confirming that as well today. The US data was where that problem is most manifest that you just described.
Yeah, I think both regions are getting a dramatic amount of monetary tightening now. And what I think because the people who are active in the market today, they really haven't seen a proper monetary tightening cycle in their careers. Yep. So we really have to go back to the history books. What you're seeing now is one of the top 3 tightening events that you've seen over the last 70 years. But crucially, it typically takes 10 months for the full impact to come through. So we simply haven't seen anything yet. So what we're seeing in both Europe and in the US is growth momentum, so forward-looking new orders have started to weaken. In both regions, output is still very high because you're working through that order backlog. Yep. But in both regions, very likely you're going to be in recession by the middle of next year, and the market is not yet pricing it because it's just feeling the nice run rate that you have.
So we're in the gap between worrying about inflation and worrying about recession.
I think it's a very good way of putting it.
When do we start? Markets are meant to be sort of discounting mechanisms. Yeah. The recession could come in the United States back half of next year. Usually we look 6 months ahead. Yeah. So we should be starting to think about that about now.
Yeah, I think there is I will call it a myth. There's this myth that the markets are forward-looking, and we like to think of it. What they typically do, they respond one-to-one to the latest growth data they're seeing. They're really just slavishly following the growth signal. Typically, they follow the forward-looking new orders because that's your best sign of where you're going. But if at the same time your output rockets by 600 basis points and you're going from -2 to +4, that's obviously a very nice drug. That's a very nice sugar high to enjoy. But unfortunately, it's not. It's exactly that. It's a sugar high.
So you sell this rally?
I sell this rally.
Where do you sell it the most? Is it in the States or is it in Europe? Like some of these European markets are up 20% off their lows. And these are really dramatic gains that we've been seeing.
I was in the US about a month ago, and the number one questions I got from the US investors, how is it possible that European equities have outperformed by 6% this year, even though you had a sharper slowdown, you had an energy crisis, and you had a war on your doorstep? How have you outperformed? And the answer is you had the spike in rates. European equities are more value-oriented. They're less sensitive. Plus, you had the support from a weakening euro, so you had a lot of secondary drivers supporting you. Going forward, if the main driver is going to be weakening growth, Europe, which is more cyclical, more value-oriented, is more vulnerable. So we say the market goes down maybe by 15%, with European equities underperforming as soon as we enter this recession territory.
You bring up cyclicals, so European cyclicals have been the areas that have outperformed.
True.
Which again, complete head-scratcher. If you back out the energy story, it looks a little kind of different, but it's financials that are still performing very strongly. Again, how do I deal with those two particular sectors?
So I think if you look at the cyclical complex, there are two dynamics here. The first one is rates have been going up and financials have been loving it. We think from here, being long treasuries, so being positioned for declining bond yields, is a very attractive trade, because declining supply chain stress also means that inflation prices come down, because supply chain stress is a key driver of inflation. So the sweetest spot for treasuries over the last 60 years is weakening growth, because then you need treasuries as a hedge, together with declining inflation. That's what we're going into. That's why we're very negative on financials, because they've been helped by rising rates and they're very vulnerable to declining rates. Then there are the non-financial cyclicals, and they've been boosted simply by the strong output growth that we've just discussed. But if your current run rate of output growth is at +4, your underlying orders are already running at -2, and you have to catch down to those, then you know that's going to be very painful for the cyclicals overall.
What does next year look like? What is the sort of trajectory? What is the topography of next year in terms of the ups and downs?
I very much like your use of the word topography there. I think it's very nice. So as basically the geological investigation of the next year outlook, I think what we're seeing is a classical business cycle, which is most recessions over the past 60 years have been caused by Fed tightening, and the Fed tightening we now have to digest is among the most violent that we've seen. The credit cycle, you tighten monetary policy, the credit cycle rolls over, then growth momentum weakens. So what we expect is a pretty much straight line deceleration in growth from a run rate of +4 now to, let's say, -3, -4 at the trough. We think we reach the trough in Q2, so you effectively have the classical downturn, risk premia go up, they're very tight at the moment, earnings come down, then you trough in Q2, and that's the next major and sustainable buying opportunity for equities. Then you go back into the cyclicals, then you dump effectively the defensive hiding places, but that point is still around 6 months away.
Is that it? Is that kind of, at that point, I can start looking up rather than looking down?
Yeah. Because at that point, everything will feel very bleak. You will have a 4% run rate. You will have a lot of stories of credit events, and we're seeing the first cracks of those. But remember how it was during the COVID crisis. The moment that the growth momentum troughs, everything is bleak. March 2020, everybody wants to hide away. That's the point at which the rate of change of growth momentum goes from negative to positive, and that's the number one green light that you need to see.
But that's the cyclical low.
That's the cyclical low. And if you look back over the cyclical lows, March 2020, August 2012, March 2009, once growth momentum stops falling and goes up, you need to be brave. You need to step in and say, okay, from here, all the growth surprises will be positive, but you have to be confident that you're at the low of the macro cycle, and that's Q2. It's not now.
Okay, we're going to go back to the topography here. We're going to be talking about valleys. Is it at that point, are we in a U-shaped valley where the bottom is quite long?
Yeah.
Or is it a V-shaped valley where you don't have much time to make that decision?
Yeah, we think it's going to be V-shaped for two reasons. Right now, as you say, COVID cases in China are rocketing, so there was a hope among our clients that maybe China is going to offset the slowdown that you've seen. That now seems unlikely, because they will things first will get worse before they get better, because they have to bring this outbreak under control. So very likely in Q1 next year, growth will be negative in all three major regions, China, the US, and the euro area. But then in the second half of the year, China will reopen. They are committed to effectively easing zero COVID. And so what you will see is an easing drag from the rollover in the credit cycle in Europe and the US, and reopening in China, and suddenly that's a very nice collection of rocket fuel that you there have for the market, not to get stuck at the bottom, but to come up again.
So you can basically sell now, put your feet up, and wait until the spring of next year.
Sell now, buy later.
That sounds like a very good idea. Sebastian, thank you very much indeed. Always a great pleasure. Sebastian Regler, Bank of America, Head of European Equity Strategy. Thank you very much indeed. Coming up on this program, the approval of the EU's energy package could now slip until mid-December. We're thinking December the 13th. We're going to bring you the latest from the energy ministers' meeting that is taking place in Brussels today. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
So natural gas prices easing a little bit in Europe today. This after EU energy ministers held off approving a package of emergency measures which were basically designed to cap gas prices. Let's bring, or go back to, should I say, Bloomberg's Maria Tadeo. She's been at the meeting in Brussels. Maria, walk us through what has happened at this meeting, or more importantly, what has not happened at this meeting.
Indeed, Guy, because there's been a lot of talks about a cap, and yet we wrap the day with no cap at all. Now, let's make a difference here, because this is key. There are two debates going on parallel, but they're different. You have the gas cap. That is what energy ministers debated today. There is a package put forward by the European Commission, but the sticking point in that package, no question, not a secret, is that level of price cap, 275 euros megawatt hour for 2 weeks in order for this mechanism to be triggered. Now, the countries that want to see a cap on gas say this de facto is not a real cap and it will not bring down prices. The flip side, however, and this was very present today in discussions behind the scenes, behind closed doors, there's other countries that suggest artificially changing prices will endanger supply. This is a flawed idea. It is a flawed concept. Now, where do we go from here? We'll have to wait until December 13th. That is when energy ministers will reconvene, and you'll find me here on this spot again for another meeting. Now, on the oil, remember that's the other cap that's being debated. What we understand is that European officials today have decided they cannot agree on a price point either. Remember, there had been a debate around $65 a barrel, potentially $70 a barrel. They cannot agree on the price point, and that takes discussions to tomorrow. So a lot of talk about the cap. Well, but in reality, we end the day with no cap.
a lot of things to get our arms around, our heads around. Maria, you've done a fantastic job updating us on all of this. Thank you very much indeed. Maria Tadeo joining us from Brussels. Let's talk about what could come next. Leslie Palti-Guzman joining us now, CEO and co-founder of Gas Vista. Leslie, Europe is really struggling with this gas price mechanism. The reasons are reasonably clear. Messing with the markets could have really big and profound implications in terms of supply. How does Europe deal with this problem? Is there a better way of dealing with it?
Hi, Guy, and thanks for having me. So absolutely, there are huge divisions among EU members right now. You have on one side a coalition led by France, Spain, who are in favor of caps that will have teeth and with triggers high enough. And on the other hand, you have Germany, Norway, the Netherlands, Denmark, that don't want to mess up with the free markets and liberalization package that the EU has been working on for decades. So we are at a point where we've seen on Tuesday preliminary measures that, according to the market consensus, were not strong enough, watered down cap price proposal. And I think the policymakers are going to chew on it in December. And in the meantime, we'll try to find a consensus.
Where do you think that consensus could ultimately land? What do you think a compromise looks like?
So what I think happened is that the proposal came too late, too little, and is a bit complicated. They can try to simplify the proposal. And actually in the proposal, they mention a global LNG price, but they haven't yet detailed what is this global LNG price, what index are going to be used. It can be JKM, it can be a basket of pricing hubs. So that needs to be determined. I think that the urgency is lessened also because we've seen prices in Europe drop compared to the max that they had reached in summer and beginning of fall. And I think some countries have been reassured by the flow of LNG cargoes that have arrived this fall in Europe. A record number of cargoes are also expected this winter, which have put downward pressure on prices. So we see, for example, with our Leviathan predictive platform that in November, that might be as much as 9 million tons of LNG flowing into the EU.
Leslie, how much of that is just a backlog that has been produced by the lack of regasification facilities? And once those regasification facilities start operating, we're about to see them operating in Germany, that backlog will ease fairly quickly and prices will start to rise back up again.
So it's a very good point. Germany, for example, is expecting between this winter and next winter about 5 new FSRU potentially. So it's a huge amount of additional infrastructure that is going to be helpful for Europe for increased imports. What has already helped Europe is that China and other Asian markets have delivered their unwanted cargoes to Europe for profit. So as long as prices remain high, those cargoes will flow to Europe. And that's why also countries like Germany want to make sure that their investments in those new FSRUs are going to be, worthwhile and that cargoes will come, because you can have infrastructure and no cargoes coming. So you need both increased infrastructure and the cargoes flowing into your infrastructure.
Leslie, one way to keep the cargoes coming and one way to cap prices would be to introduce long-term contracts. We were hearing earlier from a Spanish minister talking about the idea that Europe would only think about those up to 10 years. China's just signed one with Doha that lasts 20 years. If Europe wants to cap its gas prices, does it need to think about longer-term contracts?
Yes. So there are right now a kind of a dilemma for Europeans because they have worked on those liberalization of the gas market, relying on the spot and the hubs and free flow of LNG. But maybe with a lessened priority on energy security. Now that energy security is back on the front line, they need to make sure that those cargoes are heading to Europe And if they are not signing new long-term contracts, there will always be the risk that if the market is undersupplied, or if prices in Europe are lower than in Asia, those cargoes will flow to Asia. I think until recently, Europe had a free rider strategy, meaning that they were letting the Asian buyers sign long-term contracts or letting the portfolio supplier, like the trading companies, sign those contracts. And then they would have the leftover, like whatever nobody wants, Europe was the sink. Except that in times of urgency, in times of energy crisis like we have now, it doesn't guarantee necessarily the supply to Europe. So I think Europe will need a mix. Still some spot volumes and some new long-term contracts. Only 4 power companies in Europe have signed new long-term contracts since the Ukraine-Russia war started. With the US, but we see more coming.
Leslie, really great update, really great analysis. Thank you very much indeed. Leslie Pazzi-Guzman joining us from Gas Vista. We really appreciate it. This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority. When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Okay, we continue to follow what is happening with the FTX story and the next potential domino pieces to fall. Binance's CEO, CZ Zhao, discussing the path forward for the industry in an exclusive interview. He spoke earlier to Bloomberg's Haslinda Armin.
We're thinking about setting aside $1 billion first, and then if that's not enough, we can allocate more. And if that's too much, I think we're roughly angling for 6 months. If after 6 months there's unused funds still left and there's not that many projects, hopefully the industry would have recovered by then. If there's still unused funds, we can withdraw it back. That's kind of the rough thinking about it. A blog post will go out with some more details today.
Might you bid for FTX assets? And if so, what might look interesting for you right now?
We definitely want to look at those assets when they come through a liquidation court. I think originally we want to engage directly with FTX, but then we found out that based on Bloomberg reports, there are potential investigations going on. So we said hands off. But they invest in a number of different projects. Some of them are okay, some of them are bad. But I think there are certain assets that may be salvageable and that may be of interest. So we'll look through that when they become available.
We know that you looked at FTX's books. What did you see? Was there misuse of customer funds?
So we looked at the data room. To be honest, we became very quickly, there was a lot of funds missing, like to the tunes of, double-digit billings. I couldn't trust any of the information in the data room. Like, that's a virtual data room, basically a cloud drive. I couldn't trust any of the information. So I don't believe any of the information we got was accurate or precise.
CZ Zhao speaking to Haslinder Armin, Bloomberg's Haslinder Armin, a little bit earlier on today. We're coming to the end of the day here in Europe, Thanksgiving in the United States, as a result of which light volume. But nevertheless, we do have markets open here, albeit on thin volume. FTSE 100 lagging a little bit today. Some of the big healthcare stocks have acted as a bit of a break on that market. But I think the big story out of London today has been DM. Dr. Martin Boots. We'll talk about that in a moment. The DAX up by around 0.8%. You've seen some of the chemical stocks performing relatively well today. And the CAC on sort of somewhere in the middle, up by around 0.8. But as I say, it is very light volume. That has been the story today. The currency market, I think, has probably been more interesting in terms of the signal that it has delivered. The dollar has been down. You've seen the euro and the pound both tracking a little bit higher. We will deliver the close in just a moment. We'll talk about some of the single stocks that have been firmly in focus. One stock that is certainly, well, it's not a stock anymore. One company that is in focus for European regulators is Twitter. Now, it used to have a Brussels office. It wasn't a particularly big Brussels office, but basically it acted as a go-between between the regulators in Europe, in Brussels, and the company. That office no longer exists. Everybody has now either been fired or left. Where does that leave the regulators? Where does that leave Twitter? We're going to discuss that in the next half hour as well. The close is next. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Stages of a sustainability revolution that has the magnitude of the industrial revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
So we are wrapping up the equity session here in Europe. We're coming through the close. Volume is light. I keep banging away at this, but it is relevant. The price signal today, I think, fairly limited from European equities. A lot of the pricing that we've seen in Europe today is actually coming from what we saw yesterday with the Fed minutes released at 2 p.m. Eastern, showing a more dovish tilt, let's put it that way, and a move maybe down towards 50 basis point hikes from the Fed. The market seems to have taken that relatively well. Certainly equities have. So a broadly positive picture. FTSE 100 lagging a little bit. DAX up by around 0.5%. The Polish market outperforming even more than that. The CAC sort of somewhere in the middle, up by around 0.5%. So let's dig into how the session has looked. This has been the trajectory of what we've seen today. A move higher first thing this morning, really delivered by some of the earnings actually, but also by some of the narrative coming from the Fed. We basically kind of faded a little bit throughout most of the day with a little pop towards the end of the day. We're trading 441. We're up by around 0.5%. In terms of the sector story, again, the Fed is relevant here. The central bank story is relevant here. What you've seen is real estate outperforming. So real estate's up by 2.56%. This is rate sensitive. So if the path of rates starts to flatten a little bit, that is good news. Also a little bit of clarity. Obviously, they priced off swaps, and they're watching very carefully what is happening with the interest rate environment. Chemicals, as I mentioned, have also done relatively well today. Utilities, again, interest rate story, doing relatively well today, but there's also some individual news there. Down at the bottom, technology, which is interesting, food and beverage, construction, and industrial services are where we've seen the underperformance. But every single sector in Europe has been in positive territory today. Let's talk about some of the single stocks. Let's start off at kind of one end of the luxury story, and then we'll maybe talk about another. Kering, owner of Gucci, Alessandro Michele, is going to be leaving. This was the guy that came in and, a bit like Tom Ford did back in the day, completely transformed the look of Gucci, completely put it on a different trajectory, and as a result of which, Gucci absolutely skyrocketed. Now, nothing lasts forever, and as a result of which, maybe there's a new direction that this company now needs to go in. So Michele is going to be stepping aside. As some analysts have been noting, you may see some short-term hits to sales as a result of that before the new look and feel of Gucci is established, whoever ultimately is going to be sort of taking that forward. But Kering, not really reacting too much to this. I think it was anticipated. I think that is the story. Staying in apparel, though, Dr. Martin, a completely different story. What you've seen here is a business that is quite exposed to the middle class, maybe quite exposed to discretionary shopping, really being hit very hard indeed. Today's numbers were way off what the market was looking for, and the market has punished Dr. Martens. DMs, obviously, very fashionable. Back in the day when I was at university, everybody had them. They went through a little bit of a decline, but have been on a real renaissance since. But today, really maybe that came to a conclusion. The stock down by 22, nearly 23% today on the day. And then I want to wrap up with Credit Suisse, which has been a kind of perennial story throughout this week. We've been watching very carefully what's been happening with the concerns surrounding what's happening, particularly in the wealth management side of the business. We had the story yesterday coming out of the EGM, just how much they're losing, particularly in Asia on the wealth management business. Today, a fantastic story on the Bloomberg talking about kind of who's benefiting from that. UBS, clearly one of the big beneficiaries, but not the only one. But certainly Credit Suisse reacting today, maybe more even than it reacted yesterday, but not completely. The stock down by 1.91%. It was down by 5% yesterday, but a kind of continuation of the losses really today. So down by nearly another 2%. So a really tough picture for a number of single stocks today, but broadly, Europe has kind of drifted sideways. I think we're probably going to have to wait, to be honest, until Monday before we get a proper price signal. I know the US will be back tomorrow, but I think a lot of people will continue to take the day off. Let's stay with what's been happening in Europe, because I think there's an interesting angle developing surrounding Twitter and what is happening in Brussels in particular. Now, Twitter used to have a Brussels office. It wasn't particularly big. It had 6 people in it. But the last 2 people in that office have now departed. The office, of course, absolutely critical in terms of Twitter's relationship with EU regulators, very powerful EU regulators. Excuse me. Now those regulators are going to have nobody to talk to. How are they going to react? Well, let's try and find out. Gillian Deutsch joins us now with more details. Gillian, can you just talk to me about how important Brussels is for these social media companies? European regulators are very influential, very powerful, and very keen to find out and make sure that these social media companies abide by the rules.
Absolutely. I mean, Brussels is really the capital of tech regulation. It started with the infamous GDPR rules, the data protection rules, and they're already very concerned with how Musk's mass layoffs, the subsequent departures from Twitter are going to impact the way that Twitter can actually comply with both the GDPR and upcoming legislation, including the Digital Services Act. We did see in Ireland, the data protection officer called in Twitter's representatives, asked them to explain how they're going to actually follow the data protection rules after the data protection officer left recently. They said that they have an acting officer in its place, but they are still closely monitoring the situation. And now we have more legislation coming up that's going to be, it's very complex and going to be very costly to comply with. In a nutshell, the Digital Services Act basically gives Brussels unprecedented powers to tell tech companies to take down illegal content and to do more to tackle content that might be legal but still considered harmful. And if companies do not comply, we're looking at massive fines, possibly not being able to even operate in the European Union. So there's some serious ramifications.
How quickly could this happen?
So most likely we'll see issues coming up in the summer. Brussels will have to, or companies will have to notify to Brussels that how many users they have in February. After that, I have about 4 months to start instituting a lot of extra controls, including having enough moderators, content moderators across the European Union, adding other tools like letting users flag possibly illegal content to the platform, and perhaps most importantly, also starting to submit reports to the European Commission that say, hey, this is what we're doing to comply, to reduce harmful content, including disinformation, harassment, etc. And you know, if there are issues, if the Commission says, hey, you're not doing enough, actually, they can tell companies like Twitter to change their algorithms to downrank content, or you know, if they can even raid the Twitter offices in San Francisco to see their algorithms and see if they're doing enough.
From a revenue point of view, how important is Europe to Twitter? Do we know?
Well, Europe is a huge market. They have about 450 million people. So, you know, regulators have always told Brussels, or told Twitter, Elon Musk, even when he was considering buying the platform, you know, yes, you can come in with this free speech focus and want people to speak their minds much more freely and take down less content, but you have to follow the EU's rules. It would cost them a lot of money if they did not, if they just completely were taken off the EU market.
Is there any sense that this is a deliberate move by Musk?
Well, Musk has tried to tell regulators, you know, I know the DSA, I know this is coming up, I want to comply. Actually, the day after Musk took over, he called Internal Market Commissioner Thierry Breton, who's really in charge of content rules here in Brussels, and told him, look, like, we will comply with these rules. But the bigger question is, yes, maybe Musk knows about the rules, he wants to comply, it'd be costly if he doesn't, but does he have enough staff to actually do so?
We will wait, we will watch, and we will certainly pay attention. Gillian, thank you very much indeed. Really appreciate it. Gillian Deutsch joining us on the latest regulatory angle on this Twitter story. We are done. We are finished. The end of the day is upon us here in Europe. Equity markets, light volume, but a big tick down actually during the auction at the end of the day. Maybe that's been caused by the light volume, taking the FTSE 100 basically back down to flat. We've taken a few points off the DAX and the CAC 40 as well over in Paris, but a broadly positive day for European equities with most of the major sectors in positive territory. Coming up, we're going to be talking about the big shopping event, which is about to kick off, Black Friday. Alex Steele is agog with anticipation. She is poised over her keyboard. It is obviously one of the most popular shopping days of the year, and we are going to be talking about this huge day with the largest retail trade association. Matt Shea is going to be joining us. He is the CEO of the National Retail Federation in the United States. That conversation next. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
The tag on the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
So, keeping you up to date with news from around the world, here is the First Word News. I'm Guy Johnson. Ukraine has restored electricity and other vital services to some areas, but most of the capital and other parts of the country are still without electricity, and it is bitterly cold. This after another wave of Russian missiles targeted civilian infrastructure. Net migration to the United Kingdom hit a record high of 500,000 people in the year that ended in June. The surge was driven by the arrival of international students following the end of COVID restrictions. Plus, there were resettlement programs for people from Ukraine, Afghanistan, and Hong Kong. Thousands of Amazon warehouse workers in around 40 countries will mark Black Friday with protests and walkouts. They are demanding better wages and working conditions in a campaign called Make Amazon Pay. Employees in Europe, the United States, India, Japan are amongst those that are going to be taking part. Amazon says it takes its role seriously on what it calls these important matters. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Guy Johnson. This is Bloomberg. So, Black Friday shoppers are gearing up for the biggest shopping day of the year in the United States. The National Retail Federation says an estimated 166 million people are planning to shop from Thanksgiving Day through to Cyber Monday this year. Here for more is the president and CEO of the NRF, the National Retail Federation, Matt Shea. He heads the biggest retail trade association in the world. Great to have you on the show, Matt. Is this going to be a normal Black Friday?
Well, thank you, Guy. It's nice to see you. Good afternoon, I guess, and happy Thanksgiving. You know what? I think what we're going to see this holiday season is something that is more typical of our pre-pandemic behaviors and experiences. You know, the last 2 years in 20 and 2021 were marked by concerns about the health environment, were marked by real challenges with the supply chain and inventory levels. And so this year, I think we're in a better place in both of those categories. The health environment, of course, has dramatically improved. So people are out, moving around, traveling, enjoying social gatherings. And in terms of inventory levels in the supply chain, both of those have improved dramatically. So I don't think we're going to have too much or too little inventory. I think we'll have about the right levels of inventory, but we're also going to see a more promotional season. We're going to see more consumers waiting until later in the holiday season to go out hoping to get a better deal, better prices, and find those holiday gifts later in the year.
How is inflation going to affect this year, do you think, Matt? We've seen, obviously, a huge pickup in inflation. The consumer, therefore, is being a little bit more careful, maybe. How do you see this challenge?
Yeah, Guy, our forecast for retail sales for the calendar year in the U.S. were that they would increase between 6 and 8% through the 12 months of 2022. And that's exactly our forecast for this holiday season for the months of November and December, that will also see 6 to 8% growth. So if you think of inflation on goods, and we use a measure the Federal Reserve uses here called the Personal Consumption Index, which also includes services as well as goods. So on the goods side, we've actually seen some disinflation. So our forecast of 6 to 8%'s got real growth, but nevertheless, we know consumers really looking for value, looking for price, trying to stretch those dollars as far as they can, especially those at the lower income levels.
Gas prices have started to come down. In fact, they've come down relatively rapidly recently. How big a help is that going to be?
I think that's a big help. And, again, when you look at the stratification that's taken place across income levels for those families, those households in the U.S. with $50,000 annual revenue or savings for that year, earnings, and $100,000 even and less, those families are really feeling the pinch of increased energy prices, increased food prices, increased housing and rent prices. So some relief at the pump. That reduction that we've seen on gasoline prices has helped a lot, helps them put more in the basket on a monthly basis and make those earnings go further, especially at a time of year when everybody wants to be out finding that perfect gift and having that holiday experience.
It means you can also drive to the store and not feel guilty about it because it's so expensive. Matt, how do you think the balance is going to be this time round? People visiting stores versus people shopping online?
That's an excellent observation. And we know, again, in 2020 and 2021, far fewer people were actually out in stores. We had different levels of footfall. Not as many people were out for a variety of reasons. This year, people are going to be back in stores. And I think in terms of the upside surprise to the market, if there is one, I think it's going to be that stores will do very well. And that while there'll still be enormous engagement online and through the digital experience, either mobile shopping or shopping remotely, staying at home and doing this on your computer or your laptop, more people will be back in stores. Our forecast is 166 million people out over the 5-day weekend beginning today through Cyber Monday. That's almost 10 million more than last year, and that's a record since we started keeping these statistics. So I think the in-store social experience is back. Traveling, to your point, gas prices have reduced. People are going to be flying, traveling, driving, and that'll be good for store traffic.
Matt, you talked about inventory at the beginning of the conversation, so let's just kind of maybe wrap up our conversation around that. We've worked our way through the reporting season of the big retailers over the last few weeks, and my observation would be that actually that inventory management has been very lumpy. Target, for instance, I'm not going to ask you to talk about single stocks, has been struggling with it. Walmart maybe less so, other retailers having a better experience. How big a difference is there going to be in terms of the way discounts are going to work, depending on individual retailers? Some have got some pretty big inventories to shift.
Yeah, earlier this year, we certainly saw in late spring, early summer, more broadly speaking, excess inventory was a challenge across the industry in a variety of categories. Consumers made a quick pivot, changed their behavior, moved away from a lot of discretionary, felt the impact of inflation, had to quickly move some of those dollars into the necessity categories. Different retailers have worked through that process in different ways. On balance, I think the reports of the last couple of weeks of earnings, there have been more winners than losers, but there are, to your point, still challenges out there. Consumer behavior continues to evolve. Retailers are working their way through some of the inventory situations. So I would say, you say lumpy, I think that's a description I would use maybe as a bit uneven, and it's not consistent across the board, but we'll see how it plays out through the rest of the next 5 or 6 weeks.
It's going to be interesting to see how it works in terms of the price tags that are being offered. Matt, thank you very much indeed for joining us on Thanksgiving. Have a happy Thanksgiving. We really appreciate it. Matt Shea, President and CEO of the National Retail Federation. Coming up, China's daily COVID infections climbing to a fresh record high, pushing some of the country's key cities to a standstill. More on that story next. This is Bloomberg.
Expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs are getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
So China's COVID cases have hit a fresh record high. The surge comes at a critical moment, of course, for leaders in China who have now got to decide whether to tolerate some spread, this is quite a high spread, but some spread of the virus, or basically revert to strict COVID zero curbs. Is there a happy medium somewhere in the middle? Probably difficult without, obviously, vaccination programs being boosted quite significantly. Bloomberg's Deirdre Hitwell joining us now to discuss this. We're seeing cases picking it back up again, which strikes me as being inevitable. When you start letting people out again and allow them to mix, you are going to see cases rising.
Absolutely. We've seen that happen everywhere else in the UK, in the US. The minute you come out of lockdown and you ease restrictions, people start mingling. Of course, we're in winter, so there's more mingling indoors, and it's inevitable that transmission will happen.
In terms of, therefore, what happens next, they don't have the vaccines in order to be able to counter what we're seeing at the moment. So is the inevitability of further lockdowns now increasing?
I think that China has a really difficult situation to face here because they almost need to re-educate their citizens that you can live with the virus. The difficulty for them is, as you say, they've vaccinated with domestic vaccines, which haven't proved to be as effective as the mRNA vaccines, and also their vaccination rate amongst the elderly, who are much more vulnerable to COVID, is not as high as in the West. So they face a really difficult balancing act as they try and ease measures, but not so fast that they completely overwhelm their health system. And we're already seeing it with the, the record high cases that we have at the moment. Already in some districts, they're reintroducing some curbs to try and slow down the rate of transmission.
Because the healthcare infrastructure isn't there.
Absolutely. I mean, all healthcare systems will be overwhelmed if you have a huge influx of severely ill patients who need, incubators and what like, and those sorts of things. And we've already seen in Beijing, they're starting to build makeshift hospitals as the cases start to rise. So it's a really difficult situation for China at the moment.
What is this? One of the things we're seeing in the economic data in the West at the moment is an easing of some of the supply chain bottlenecks that we've been experiencing now. China has been partly responsible for that. Should we therefore expect that easing to continue, or should there be an expectation maybe actually that we're heading back into difficult times where sourcing stuff from China remains difficult?
I think It is starting to ease, but only in certain areas. We're still seeing a lot of volatility in glass supply, and obviously energy costs. Shipping rates are starting to come down. It's just really hard to call because obviously China is such an important base for manufacturing. And if you have this continual stop-start of lockdown and almost like a flip-flopping of strategy, it's really hard for companies to plan for that. But I certainly don't think we should expect any huge improvement in supply chain log jams this year and next.
We saw the Apple situation with the Foxconn facility. Obviously, people have basically had enough. How sustainable is the current situation?
Yeah. Well, what's interesting about the Foxconn is they have had enough, but also some of those protests were driven by their fear of the virus. Yeah. Because, this is the point. I mean, China has spent the best part of 3 years telling their citizens that this is the biggest threat that the mainland faces and that, they've restricted personal freedoms to an unbelievable degree. And now to try and change that message around and say, well, actually, we need to learn to live with this virus is a huge shift in messaging. And I think that is the problem that they're facing at the moment.
Great stuff, Deirdre. Thank you very much indeed for updating us. Greatly appreciate it. Bloomberg's Deirdre Hipwell. That just about wraps things up for today. The European markets have now closed down. We'll be looking forward to, obviously, the US reopening tomorrow, but it's going to be on very light volume. I don't think you're going to see proper price signals until Monday. You've also got the small matter as well of the fact that England is playing the United States at football, a game you play with your feet. That will be taking place tomorrow. I suspect that's going to divert a lot of attention as well. If you're out on Black Friday, have a safe shopping season. I hope you get some bargains. I hope you're enjoying Thanksgiving and the turkey. I hope you enjoyed the show. I'm Guy Johnston. This is Bloomberg.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Deflation is a terrible thing. Inflation you could tolerate.
You could trade anything as a trend fall.
When you think about Bitcoin, I don't think it's a currency. I think it's a commodity.
Today, we're in an everything bubble.
Genial and unflappable, even in the heat of a corporate crisis. That's the reputation of C.S. Venkatakrishnan. Known as Venkat amongst colleagues, the former Barclays markets chief took over as chief executive after Jess Staley's abrupt exit in November last year. In his first TV interview since getting the top job, we talk about the bank's so-called universal model of retail, corporate, and investment banking. So what are the challenges that lie ahead, and where does he see opportunities? Will Barclays have to increase provisions for loan losses as the cost of living crisis gets worse? Over the next 30 minutes, we talk strategy, investment banking in Europe, the future of the City of London, and how inflation will change the banking world, with the man who's in charge of Barclays for the last 12 months. Venkat, thank you so much for speaking to Bloomberg. So 12 months into the job, what have you learned about yourself and the bank?
The last 12 months have been a wonderfully educational experience. About myself, I've learned how much more I needed to learn about banking, including running a large organization, finding ways to encapsulate what our ambitions are, and to conveying it to so many people, and then visiting all, this global footprint of the bank we have. It's also, it's been a wonderful year in terms of the bank's operational performance. We've managed a bunch of crises, and we've managed them relatively well, I think. But it's the start. We are in the middle of a tough economic environment.
So in terms of strategy, the strategy hasn't changed that much from your predecessor. Is it about execution, or is it a different lens that you're looking at it with?
So I was part of the team that set up the strategy 7 years ago. And our strategy then was to simplify our footprint, focus on building a global investment bank that was, very highly competitive. And we are now number 6. We're the biggest European investment bank. It was about doubling down on the UK, where we want to be a leading financial institution in sort of everything, retail and wholesale. And it is about building up a very specialized consumer business in the US, which we've done. We like the footprint. The businesses are operating well. I think now it is the striving to excellence, which is to make sure that in all the businesses which we do, clients and customers know what we are about. We do the things that we do very well. We don't have hobbies. We're very focused. We execute well, and it's about excellence.
But can you really compete with the U.S. bank in terms of having an investment bank? Can Europe have that leverage, or are you always going to be one step below?
So we are competing. We are number 6. We've been gaining market share and revenue share in our markets business for many years. And, we are under no illusion that we're not going to catapult, nor do we want to catapult to number 3 or number 2. But we can be very good at what we do. And if we are good, people will transact with us and work with us. And you can make a very good living at the size we are.
Do you want to get bigger? Is now, if you look at the pipelines and things that are coming through, is now the right time to employ more bankers?
2 slightly different questions about getting bigger. One is, I think that as long as we do well and organically we grow, that's fine, right? I wouldn't want to take large steps, but if it happens in an accumulation over a period of time, that's welcome because it's gradual. About bankers, I think it's a question more about what sectors of banking. We've made a big push in sustainability, and we continue to expect to do that. And obviously, pulling out of some old economy sectors or reducing it, not to zero, but there is a shift in the banking wallet, and we respond to that. And I think sustainability is very important.
Are you expecting more IPOs, more pipelines? You mentioned the environment that's a little bit uncertain at the moment.
Yeah.
What does the next 12 months look like?
I think it is going to be a difficult environment for the first 6 to 9 months of that 12. I hope by the summer, when people are able to sort of see the end of the rate rising cycle, it may not have happened by the summer, but hopefully you can forecast the end of it with reasonable confidence, then businesses will feel more confident themselves in what they want to do about their capital raising and capital planning. But I think it'll take a little time before we see that clarity.
What's your biggest concern out there on the markets? I know you had some good results. A lot of it has to do with also how you traded. Your traders performed very well, but we have a very uncertain environment. We don't know what inflation looks like, the cost of living. You have exposure to mortgage. There's leverage out there. What keeps you up at night?
Well, I think what we've had this year is a series of incidents which would have been difficult to forecast at the start of the year. Even at the start of the year, I think across the industry, people were cautious because they knew we were at the start of a rate rising cycle. It's never good for credit assets in those periods. It's not good for equity assets generally in that period. Then you had the Russia-Ukraine war. And then here in the UK, you had that little volatility with gilts and LDI. So there are pockets where there could be leverage, and there are pockets where there may be rapid movements. And in this kind of a rate rising cycle, you would expect to see that happen. So it's rather than being specific worries about certain things, it's being generally aware that you're driving a car when it's rainy and the roads may be slippery.
So what does that mean in terms of risk management? What does that mean in terms of you preempting some of the things that could go wrong?
We have been operating through the year with relatively less risk and what I would call relatively less long biased risk, meaning expectations of asset prices to rise than we would normally have done or had done a year or two ago. So we, in the language of traders, we manage from a defensive position.
Which means that things could still go wrong in unexpected ways, or that you feel confident that you have this. I mean, you lived through the financial crisis.
Yes.
And every 2 weeks, somebody says, this is going to be worse than the financial crisis. This is worse than the 70s. What kind of crisis are we going to see, and what does it mean for the banks?
Yeah. First of all, I don't think, as far as the banking system goes, this will be worse than the financial crisis. I think banks are much better capitalized, much better risk managed, and much more aware of the importance of doing that than they were back then. And the regulators are also much more intimately involved and engaged with the banks in understanding bank exposures. So I think it's not going to be like that. I think from our point of view, and speaking for Barclays, what we have to worry about is the impact on consumers. We are starting at a point where people have strong balance sheets and employment is very high. So these are very good initial conditions. But squeezes are coming in different ways. In the UK, to a greater degree than the US, you've got the energy price squeeze. And also in the UK, to a greater degree than in the US, you've got a squeeze coming from higher interest rates and mortgage prices and rents. Because it's more of a variable rate market. It's more of a fixed market than it used to be, but it's more variable than the US is, which has a 15 or 30-year fixed market.
But you're not seeing that, right, in consumer spending right now. You're not seeing it in mortgages either. Is there worry that we're complacent and then at some point next year, early next year, it hits us hard?
Not that we are complacent, but even though we've started off in a good condition, there are factors that are eroding that strength of the consumer balance sheet. What I'm hoping you see is what people will call a soft landing and a shallow recession, helped by the initial conditions. And so what you might see is an increase in unemployment. You might see some credit weakness among customers, but it won't be so bad that you see distress in society. However, it has to be managed carefully, and it has to be managed aggressively with a balancing of the budget, and that's what the Prime Minister has said in the last couple of days.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S. and it's a safe bet that some of them will eventually find their way to the C-suite.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight, with replays all weekend on Bloomberg Television and Radio.
Talk to me a little bit about the last 6 weeks. So you mentioned the gilt. I mean, was there a moment where you were in the office thinking, like, as Barclays, you're one of course, the players in selling and buying gilts, with the margin calls coming in and saying, like, I don't know what happens in the next 2 hours.
So first of all, I think that the volatility was managed extremely well by the very effective, targeted, and time-bound actions of the Bank of England. So I think buying gilts, buying inflation-linked gilts, and then the repo facility that they put in, working with the banking system, all helped ease the pressure in the crisis. And you've got 10-year gilt yields now back below where they were at the day of the mini budget on the 23rd of September. As for us, I mean, we are large in the gilts market. What was important for us, as we saw it, was this was not a solvency issue at all for the pension system. It was a liquidity issue. And it was a liquidity issue because what was a very important feature of the UK pension system, which, by the way, I think is a good feature of the pension system, which is a matching of assets and liabilities, which employed leverage, created a liquidity problem. So a liquidity problem had to be managed. And the liquidity problem was managed by the government intervention or the Bank of England intervention, the repo facility, which allows people to borrow against assets rather than sell them, and by slowly releasing the pressure. And, so far, so good.
Do you think that will change, actually, regulations surrounding pensions in the UK?
So I don't know the answer, but I think what is important is that the UK pension system in aggregate is very well funded. It's about 125–130% funded ratio, which is extraordinarily good, which gives it a good starting point from which to manage to a less leveraged future.
Is liquidity the biggest concern for banks right now? I mean, we're again hearing, the U.S. Treasury Secretary having to do things maybe to put a bit of extra liquidity or to pad it out in the Treasury market.
Bank liquidity, I don't think, is an issue. We've had liquidity regimes. Funding models are much, much more robust than they were in the financial crisis. I think part of what people are worried about and what they saw in the gilt market was the liquidity in underlying trading, which is that these markets are not deep with small bid offers in large sizes of trades as they used to be 15 years ago. And I think part of it, our banks are more prudent in managing their risk.
So that's a good thing.
It's a good thing, but it has a consequence that the big providers of liquidity have moved away from the banking system to the buy side.
Do you worry about shadow banking? And is there any crossover? Does that, if you look at the system as a whole, if there's something wrong with shadow banking, does it impact the big banks?
So it impacts the big banks, and by shadow banking, I'll narrow it. I'll narrow it to, let's call fintech companies, right? So it impacts the banks in a good way and a bad way. So in a good way, what they've done is they've provided digital technology ways of giving services to customers, which customers like. And it's made us up our game, right? And faster than we would have otherwise. And shame on us for not having done it earlier. Now, when they go into credit, which some of them have done, they have less regulation than we do, which is perhaps not good for customers who deal with them, who may not get the protections they do if they deal with us, and perhaps not good for them if they don't lend with quite the rigor and standards that more established companies might. On the second issue, that's a supposition. Let's see.
What's your relationship like with the new UK government? Have you had calls? Have they given you assurance about windfall taxes?
Well, I think the government is brand new. So we obviously, many of the faces are very familiar faces, and we've been in communication with them for many years, and we always are with the government. And we await to see their proposals on on taxation, on fiscal policy, on all aspects of it.
Where do you see the City of London being in 4 or 5 years? I mean, that's maybe too long a time frame. Should I say 12 months?
Well, it's both too long and too short. You know, here we are in the city, and this city has been the center of finance for 300 years. And it needs to be the center of finance for 300 more years. We certainly would wish that that were the case. And it is the center of finance because of an excellent regulatory system, transparent, fair. It is there because of great availability of talent and infrastructure, soft financial infrastructure and hard financial infrastructure. And a part of that is also a stable, predictable taxation regime. So we hope that all those elements and ingredients remain and continue to allow the city to flourish. And, you know, the Prime Minister spoke about investing in education in Britain. And if you think about what drives the financial sector, I mean, you meet many of them. It's about the wonderfully trained people in the UK and the wonderfully trained people outside who are able to come and work in the UK.
I mean, the UK has lost something, or the City of London has lost business to other parts of the world in terms of, you know, financial capitals.
Yes.
What do you need from the government today for that to be reversed?
Well, some of it is what others do, right? So once Brexit happened and you could not passport financial services to London, all the major banks had to set up trading enterprises in Europe. So that is irreversible, let's say, for the time being. I think other than that, what we need is a continuation of what London has provided. You know, education, infrastructure, people, great regulatory regime, and a stable and predictable, you know, fiscal regime.
Venkat, until not too long ago, Barclays had a activist shareholder on its back. Do you think about that?
You always have to think about it. I don't think about it from the point of view of our business mix. I do think we have a good business mix. And that activist shareholder came because he thought we should sell our investment bank. He could not have been more wrong. I repeat it, he could not have been more wrong. The investment bank has been what has kept Barclays flourishing and quite apart from many of our competitors. In the fact that, you know, we performed extremely well during COVID. We are able to have a more diversified business model. But I think for many banks like us, where our valuations are low, you know, you've always got to be worried about what is driving bank valuations.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Is Europe overbanked?
Europe is, again, separate Europe from the UK. Okay. I don't think the UK is overbanked. I think part of what drives bank valuations, especially in Europe versus the US, is there is some worry about business model. I think in our case, we've got the right business model, and what will drive our valuation is solid performance, excellent performance, as I said. Repeated, excellent performance. I think in Europe, banking is still fairly nationalized. not nationalized and state-owned, but by country. And I think we have to see at some point the experiment of one large European bank crossing borders in a meaningful way, and then we'll know.
When do you think that will happen? Do you think that will happen, or is it just a dream? We've been talking about it, I feel like, for 2 decades.
Yeah, I mean, it's a question more for the European bank CEOs. I think it should happen. I think the test case should happen, and now is a good time. You know, when you go through a period like this, there will be some banks which will benefit from consolidation and ownership by a larger entity. And I hope I see it happen, and it'll be good for Europe.
So your bank is doing pretty well. Others are doing less well. We talk about Credit Suisse almost day in, day out. Have you been able to get some business from clients that no longer want to bank with them?
Well, you know, business goes every way in the banking industry. Obviously, where Credit Suisse has pulled out of certain businesses, such as the prime business, we got some business from their clients. But look, they announced a big restructuring. We wish them well. It is important for the banking system for there to be many players who are strong. And I think, you know, with this restructuring, hopefully Credit Suisse is on a good upward trend and regains the prominence it used to have.
Venkat, talk to me about some of the human errors, right? The recession that we've been talking about and how much that cost you. I know that there was also, I don't know if it's punishments coming or some, you know, steps towards the people that did those mistakes. Where are we on that?
Yeah. So we had an overissuance of securities in the US. It was completely avoidable. It is one of these embarrassing moments you hate to have when you're CEO of a bank. It is, however, it was a human error in a very narrow way. We have done both and had an external investigation on it, an internal investigation. We have made good by all the clients affected. We have had a settlement with the SEC. We cooperated from the first minute fully with all our regulators, and we dealt with the matter internally. We are in the final stages now where individuals who were affected or involved in this are being assessed. We've got a standard process by which we do that. And yes, there will be, you know, implications for certain individuals, but that process will play itself.
Venkat, I mean, through your strategy, we talked a little bit about, you know, the global economy. Do you worry that this wave of inflation is just going to get worse? When will we reach peak inflation? When will we know that we've reached peak inflation?
You will know that the rate of change of inflation is stabilizing when the central banks start signaling it that in their rate rises, going away from 75 basis points, 100 basis points to something more normal and natural. Now, mathematically, there will be some forces that will bring inflation down, you know, just because base effects, as they call them. And I expect that will happen sometime in the middle of next year.
Is there a danger that central banks messes up, that they raise interest rates too much?
Look, there's always a finely calibrated issue about when do you stop. And I think many people have sort of raised two worries. One is that there's a sort of supply chain-led element of this. There's an energy shock element of this. Employment is at all-time highs, relatively speaking, and that people have not seen such a hiking cycle in, you know, 3 decades. Having said that, I think the officials are all across the world are all very, very experienced, and I think they'll find the right way to calibrate it.
How difficult is it in this uncertain environment, frankly, to, you know, calibrate where you want to grow businesses geographically in the world?
Well, I'll speak for Barclays. We've got you know, a real strength of the business in the US and the UK. We've got a good investment bank in Europe and a trading business. We're headquartered in Ireland, but got a large trading presence in France. And then good presence in Asia, both in the Middle East and India. We've got an excellent investment banking franchise in Singapore and Hong Kong. I expect that footprint to remain broadly as it is. We have some very interesting partnerships in Australia. We might do some others. But I expect the broad footprint to be as it is. You know, the geopolitical complexities, which are also rising, makes people more cautious also about which countries they want to go to.
Have you had to increase wages? And I'm not really thinking of the high flyer bankers, but just to, you know, to match inflation. in most of these places.
Yeah, so we did a fairly large program of wage rises in India, where we've got a large number of employees last year in 2021. In the UK, we did an interim adjustment in August of about 4% for a lot of our workers. And then we are working through another one for the end of this year. And we did one in the US also late last year. So I think inflation, especially as it affects some of our workers, we're going to have to look at it and we're going to have to respond.
When you look at the return to the office, I think bankers have to be back, what, 4 days a week?
Yeah.
How's that going?
It's going well. Look, I think we always have to create a balance. There's a level of flexibility that's come into work life, into the workplace since COVID, which I think is good. I think some of the stigma attached to working from home has gone away. And I think that's really important, especially for those who are managing young families or have other pressures that require them to spend more time at home or close to home. And I think we should continue that and should continue that in important ways. Some jobs require you to be in the office. Our trading floors are largely full 5 days a week, and that's the way it should be. Our bank branches here in London also need to be staffed, and they should be. For some other functions, it can be less, but I do think it's important for people in all functions, at all levels, to be in the office. This is an apprenticeship business at the end of the day. And it's important to have that productivity from being face-to-face.
Venkat, when you look at the strengthened dollar, this could be a shorter term. It could last for a very long time if you look at King Dollar. What does it mean for Barclays?
Well, as a financial, it's actually good. We have about 40% of our revenues in dollars. We've got a fairly big business in the US. More broadly, though, world economies will have to adjust. And that adjustment process can be painful. And you can see the pain it's inflicting in Europe and the UK. Exports will be subsidized, but import prices go up.
Venkat, thank you so much.
Francine, thank you very much for having me.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
The world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
with unmatched reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I saw a Shark Tank trailer.
Yeah, that's gonna be fun. That's gonna be fun.
What was the most, like, surprising thing about it?
How kind Mr. Wonderful actually is. How soft he is. I guess he is. Yeah, he's a really nice guy.
Did it give you any flashbacks to your YC days and the panic days of early entrepreneurship?
Yes, and that they do about 45 minutes of shooting for 7 minutes of airing.
Yeah.
And so if the entrepreneur makes a mistake, and there are a few of these,
Yeah.
it's totally fine.
I'm Tony. I was a product editor at Square.
And the four of us came together about 6 months ago to work on software for small business owners.
That's the application video Tony Xu and his DoorDash co-founders submitted to get a ticket into Y Combinator's prestigious startup accelerator back in 2013. Fast forward nearly 10 years later, and DoorDash has gone from a struggling food delivery story to a public company that's the U.S. leader in delivery. But the big question facing companies now is how to navigate a potentially prolonged economic downturn. Joining me on this edition of Bloomberg Studio 1.0, DoorDash CEO and co-founder, Tony Xu.
Tony, it's so great to see you.
Great to see you too, Emily.
In person.
I know.
You went public in the pandemic. We were talking remotely, but there's nothing quite like an in-person interview. So thank you for being here.
It's great to be here.
You basically grew up in a restaurant, as I understand it. What was it like leaving China, moving to Illinois, and starting this new life?
It was a classic immigrant story. In many ways, I would say, looking back, almost a fairy tale-like journey where, my parents came to the U.S. with $250 in the bank. We immigrated to Illinois, Champaign-Urbana. My dad got his degree at the University of Illinois. My mom put food on the table by working 3 jobs a day, one of which did happen to be in a Chinese restaurant where I moonlighted as a dishwasher. So I got to hang out with mom that way as a way of growing up, and I did that. I mowed lawns, and that's really kind of how I saved up money to, buy Nintendo games and do all the things that were the wonders of my childhood.
What do you think you learned from that? Mowing lawns early, washing dishes early.
I think 2 things. One, looking backwards, it's just that you have to work to actually get things done. I didn't understand what it meant to live off of food stamps, to buy groceries or free and reduced lunch, every day inside school. But it was a very empowering feeling to buy my own Nintendo or my way to buying my first Apple computer. The second thing was really just the power of independent thinking. My parents, because they were so busy just trying to make a life for our family, that I was largely left alone. So I grew up playing basketball, watching TV. That's how I learned English. I grew up moving around a lot as a kid. And as a result, I think that gave me a lot of time to realize that it's pretty important to think for yourself.
So you studied engineering at Berkeley, you went to business school at Stanford, and you actually started out as an intern at Square.
I did.
I can't tell you how many people have said to me, Tony Xu was my intern at Square. That's how long I've been doing this, and how, DoorDash just kind of came out of nowhere.
Yeah, it was actually a pretty stiff competition between finishing school. Jack Dorsey and Keith Raboy trying to convince me to leave Stanford and work at Square full-time. It was a fun and busy period of my time, but I enjoyed both.
So how did the idea for DoorDash come about, and the decision to not work for, Jack Dorsey and Square, which I'm sure was also kind of intoxicating, right?
The idea for DoorDash really came from this, lifelong interest in helping these physical business owners, really people like my mom. So we talked to hundreds of small business owners, and it was surprising to us that even in 2013, delivery was not a solved problem. There were business owners who would show us literally booklets of delivery orders that they would refuse. I mean, we're talking about thousands of dollars per week, which is, you know, the difference sometimes between making payroll and actually, you know, surviving. And they would just turn them down because they were delivery orders, which to us was a really novel and unfortunate phenomenon, and frankly, unnecessary one. And that really became, you know, the impetus to start DoorDash.
You started out driving for competitors, right?
I was driving for a lot of different services to try to actually understand, you know, logistics. You know, my background, I mean, as you mentioned, more in engineering, math. I thought I was going to be a cancer researcher. I mean, that's pretty much what I spent all of my undergraduate days at Berkeley doing. That kind of 180'd into world of business. But and so I think it's really important to really learn things for yourself, you know, to think from first principles. Kind of, you know, again, back to that independent thinking mindset I talked about as a child growing up.
Did you drive for Uber, Lyft?
I even drove for, you know, services that were a little bit older, you know, services like FedEx or Domino's, and really try to explore, you know, how does delivery work? And it was really trying to understand, you know, every component part. I mean, it sounds really simple, right? Bring you a burrito from point A to point B, but there were actually 20 steps involved in that delivery. It just didn't appear as obvious to the, you know, naked eye. So the first 2 years of DoorDash's life, we did deliveries almost every single day.
So where did you go from there? I mean, early days, I know Elon Musk has said starting a company is like swallowing glass and staring into the abyss of death.
One of the first ones came actually as early as month 3 of the company's life. So we were maybe 11 weeks, 12 weeks old as a company. There was a big Stanford football game in September. And, you know, long story short, we were late on every single order. And we had no ability to turn off the site, so it was just horrendous. Everyone in the company, all 12 of us, were delivering, and everyone, you know, rightfully so, was furious because of how late we were. And so we had a decision to make. You know, do we do the right thing and refund, you know, every single customer, which would have cost us about 40% of our bank account, or do we, you know, do a less right thing and survive another day? Because it was very hard for us at that time to raise capital, which, you know, was something true for DoorDash's early history. And, you know, it took us about 30 seconds to click, submit, refund. And, you know, the lesson for us always as a founding team, and frankly even today as a company, is we'd rather die chasing excellence than live to be mediocre.
It wasn't so obvious either in the earlier years. I remember in 2016 you did a down round. I think you actually came on the show around that time. How did you weather the doubters and the people who didn't believe?
There were about 1,000 days in the desert between 2016, 17, and 18. Sometimes with company building, so long as you can convince yourself, because time is your, you know, most precious resource, you should keep going. And if you can keep going long enough, you might get lucky enough to make it.
So over time, how did you balance quality with the need and desire to scale, and then scale globally?
In these types of businesses where it's low margin, high complexity, you really have to figure out what your unit of business is. You know, for us, that was a city. So in order to, before going to 7,000 or 10,000 cities globally, we made one city work. And after City 1 worked, we made City 2 work. And after we started getting higher and higher confidence that we can make baskets of cities work, irrespective of the geographies or what, you know, the customer situation looked like or what the merchant makeup was, then we gained the confidence to actually roll out everywhere.
Then came the pandemic. Brian Chesky has said the pandemic was like a torpedo for Airbnb. Was it like the opposite for DoorDash?
It was like the biggest wave behind our back, which, you know, had the ability to break us, and it almost did, because we grew 2x in 2 weeks. We went from a singular U.S. restaurant delivery business, that's what you and I would be talking about in 2019, to today, 5 businesses in 27 countries, you know, much more than just restaurants. And so all of that was created in the last 2 years.
The big question is, how much do customers keep ordering out in a high inflation environment?
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
No one covers the world like Bloomberg.
The writing's on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
DoorDash went public middle of the pandemic, and I remember actually you were coming on Bloomberg and the price doubled at the open, and we were coming out of obviously terrible economic times, the depths of the pandemic. What did that feel like when, you're going out into the world starting to sell to public investors and the price just doubles?
It was certainly very exciting. It was exhilarating. It was the first time that our company went public. First time that I had ever undergone any of those types of experiences before. But at the, in the back of my head, it was that saying that you're never as good or as bad as they say you are. And so just remember that.
So tease that out for me a little bit, because the big question is, how much do customers keep ordering out in a high inflation environment? How much long-term sustainability and growth is there really?
Even though COVID is now effectively sustained and we understand how to live with it, customers are continuing to order. Those that joined us during the pandemic, they're still ordering at about the same rates as those who joined us before the pandemic. And that's because eating out and getting things delivered are pretty complementary. On the second point around inflation, I can say that in the last 60 years, in looking at the data, spend in restaurants and in grocery have only declined in 2 of those 60 years, including high inflationary times, much higher than what we observe today. And so what I think I take solace in, even though I see the fact that there is high inflation, is that customers are going to continue spending on food. And our job is to bring greater and greater affordability.
More broadly, the economy is in a tough position. Your competitors have announced layoffs and hiring freezes and slowdowns. Is DoorDash considering any of these?
I think we've been fortunate mostly because most of our investments that happened during the pandemic really were meant to build new businesses. And those new businesses have continued to grow. New businesses, beyond restaurants in categories like grocery, convenience, or retail. New businesses overseas. We announced a large acquisition in Volt, that really helped double our overall addressable market to 700 million people. New businesses in building an advertising business. New businesses expanding our services and building a platform to help businesses build their own digital operations.
Do you see DoorDash as more of a super app of the future, or is it something different?
Well, I see DoorDash as really solving 2 problems. Problem one is, how do we bring incremental demand to all the physical businesses as they kind of figure out their own digital in-house capabilities? And the second problem we're trying to solve is bring tools to these businesses.
There's still a lot of competition in delivery. Who do you think survives the delivery wars? Who doesn't, and why?
Well, delivery is a scale economies game. At the end of the day, you can survive even doing deliveries from a singular store. There's still mom and pop pizza shops and Chinese restaurants that do their own delivery.
Do you see DoorDash as a challenger to like Walmart, Amazon?
Well, I see DoorDash, as a champion of local businesses and physical businesses. I don't think that a world in which we just get what we want to buy or consume for a few places is a world that, again, is as worth enjoying living in. So our job is to make sure that all of these businesses, all of the millions of physical businesses globally, can continue to compete.
I do a lot of DoorDash, helps me be a working mom. Whenever I interview you, I get pings from Dashers, and some of them say they don't get paid enough. Some of them seem pretty angry. What's your response to them?
We want the local economy to grow and to thrive. That includes Dashers. We have 3 million Dashers that come to the platform every single quarter. And so it's really important to me what they say. And it's, in fact, why the company, myself included, we still do deliveries, in other words, once a month.
You still do deliveries once a month?
It's why we have a Dasher Community Council that we started 4 years ago now.
I want to see one of your memos after a delivery. Are you like sending notes?
I'm texting, it's not even after the delivery. I'm texting, well, not texting while I'm driving, but texting after I complete the order.
From your deliveries, what have you learned?
Everything, all of the details, everything from, pay considerations, everything from operations at a store, which stores are a bit faster in their operations or more consistent, which stores are less consistent, where do you find the last parking space in downtown San Francisco? All of these details matter. They matter for efficiency, they matter for driver pay, they matter for merchant earnings. And so as a result, what I say to Dashers is, please continue to talk to me. I'm just Tony at DoorDash, and we're always trying to make things better. We're not saying that we're perfect, but when we look at the data that we've collected, the average Dasher is making $24, $25 an hour nationwide when they're doing deliveries, and so and most Dashers are pretty satisfied.
So DoorDash has been expanding internationally. Sounds like you're on the road a lot.
I'm on the road. I am on the road.
U.S., Canada, Australia, Japan, where else? Where next?
Germany, Israel, Finland, a lot of the Nordics. So we're in 27 countries, and a lot of that is run by the Volts team that we were lucky to partner with.
Beyond Volt, how are you thinking about M&A? Are there any verticals or areas in particular where you might be interested in acquiring?
We have 5 businesses: the U.S. restaurants business, the new categories business with a focus on convenience and grocery, non-U.S., international, 27 countries, our B2B business, and our ads business. So we have quite a full plate. On M&A specifically, it's a high bar. M&A, I think, sometimes looks a lot better on paper than can be achieved in reality. And I think it's because you're talking about, at the end of the day, combining human organizations, not just businesses or products or lines on a spreadsheet. I think you have to deliver upon that promise. And so for us, the bar isn't just, does it add to our business, but does it actually add to our culture?
You've been piloting rapid delivery, right? Rapid delivery, but rapid delivery seems to be contracting. What are you seeing in your pilots? Is this somewhere you think you'll expand or no?
So I think customers are always going to have expectations that go in one direction, right? I don't think we're going to want things delivered more slowly over time or at higher prices or with less selection. Our core use case right now is lunch and dinner, which is highly repetitive, highly profitable, which allows us to invest in things like fast deliveries. I take that with great pride. I also take it with great responsibility, remembering to invest in those who maybe don't come from privileged backgrounds.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
You bought Chowbotics last year, but shut it down. This is robotic kiosks, right? I'm curious how you're thinking about AI and Uber shut down its self-driving stuff, then they've started it back up. How are you thinking about AI and moonshots and some of this, potential new technology and how it could help DoorDash or not? Like, is it just not ready for prime time?
When it comes to platform shifts or new technologies, AI, autonomy, other types of technologies, I tend to like to make the investment. I think that's a more appropriate choice to not miss the shift. However, I think it's very important to get the pacing right. I still think that the merits behind what we were trying to do in partnership with the Chabotics team was the right idea, in which we can help restaurants effectively build a cheaper cost product. That's ultimately what we were trying to do, but we weren't ready yet with the technology.
You recently joined Meta's board. What's it like working with Mark Zuckerberg?
It's been fantastic. It's been a terrific learning experience, learning from Mark all the way to the incredible management team at that company. It has a broad mandate of different products and as well as initiatives, and it's been a privilege.
Facebook and Meta are, very controversial platform. There's, controversy about whether Facebook is really good for the world, whether Facebook should have as much power as it should. How do you think about that, and how are you advising Mark about how to use that power?
With great power comes great responsibility, and I think Facebook has a lot of influence. And Meta's, different properties, as I'm sure you cover, serve billions of people, every single day. And that's an enormous privilege and an enormous responsibility that they take incredibly seriously.
Like, should any company be more powerful than multiple governments combined?
I don't think I see it, exactly that way, right? Because it's still a contract between the company and its users. I think what's important for Meta to do, and they're doing this absolutely, is how do we set the guardrails, to make it fair, safe for everyone? And this is very, very, very difficult.
You're also an investor
I'm
in
an
a number of
investor.
different startups.
Yes.
One of them is Alchemy.
Yes.
Web3 company.
Yes.
Any plans to accept crypto? Any plans for DoorDash to accept crypto?
Crypto right now is going through a period where it's trying to, figure out what's next in terms of its use case. I think everyone, myself included, very bullish on the technology of what the blockchain enables.
What do you think could be the future of blockchain technology in food delivery, in general?
Well, I don't know if it's going to get applied directly, to food or to delivery. I mean, I think, it absolutely has the potential to create a new economic infrastructure, right? An economic infrastructure that can really serve as the basis for new banking systems, and et cetera. And so I think that's something more that's tangential to the world of delivery. Obviously, payments is one part of what we do, but it's not the central thing.
So we're going to do a little rapid fire now, a little quicker, fun
Sure.
questions. Favorite food?
I've ordered from 1,100 different DoorDash restaurants.
Wow.
So I actually like to try everything.
Your business idol?
There are people in retail that I've admired. The people that founded everything from Walmart to Costco. The team at Amazon, in e-commerce. The team, Elon Musk and what he's trying to do.
What about Elon Musk buying Twitter?
If he has time to run a third company, I think that'd be fantastic for the world.
You grew up in Illinois.
Yeah.
You live in California. You like basketball.
Yeah.
Here. Favorite
Bulls.
team? Bulls.
That's
Bulls,
easy.
not Warriors.
I grew up in the golden days of Michael Jordan, Scottie Pippen, and actually, both the early 90s as well as the later 90s in which they won 3 in a row. I'm still a Bulls diehard, even though we're in a rough patch right now.
I hear you also like to run. You run marathons?
Yeah, well, I don't run marathons today, so just to be clear. But I do run every day, so that's been my sanctuary, if you will, for the past 10 years.
Your kids are still pretty young. How
Yeah.
do you think having kids has changed you as a leader?
I think kids are amazing in that they're experiencing the world for the first time. Being able to listen versus to, talk at or to dictate an opinion, I think that's been, a big lesson. I think the second one is the power of curiosity. Kids, especially my kids at their ages of 2 and 4, are asking the question why a lot. And I think it's the best question.
It's also so hard.
And it's so hard to answer because, it requires clarity of thinking on everything on the most basic things to more complicated things.
How has being an Asian American CEO impacted your experience?
Well, I think being an Asian growing up where I was the only Asian, and that was kind of my experience in Illinois, certainly had a big experience, and where it very directly, I saw firsthand, whether it was bullying or discrimination. But I think if I were to more broadly classify that to the privileged position that I'm in today, I'm still a minority in the sense that there aren't as many Asian American CEOs or founders as maybe founders from other backgrounds. And so I think it's that reminder to, one, always recognize that. And then I think secondly, to always keep the underdog mentality.
Do you think you faced more challenges than others because Asian American CEOs are so underrepresented? I mean, Asian Americans are underrepresented in leadership roles in tech, full stop.
I can't say that, for me personally, in building DoorDash, was that the experience. But look, I think you're right in calling out that when I look around me and when I look at especially public company founder CEOs, well, A, there aren't that many. B, when you start filtering for, those from Asian descent, it's a much, much smaller list. And so I take that with, great pride. I also take it with great responsibility, really, and again, remembering to invest in those who maybe don't come from privileged backgrounds, giving them an equal shot at it, and to always to stay hungry.
You changed your name to Tony when you moved
When I was 5, yeah.
to the U.S. You're 5 years old. After Tony Danza,
Yeah.
who was the star of Who's the Boss.
Correct.
I love that.
I did. No one could pronounce my Chinese name, and so I said, okay, well, let's just make it easier.
Yeah.
And so I walked with my dad to the immigration office and legally changed my name.
Did life change? Did it feel like life changed after that?
It felt a lot easier to say, hi, I'm Tony.
What's it like being the boss now?
Honestly, I think I don't see myself that way. And I recognize that that's probably not how others view me, but I really view myself as a teammate. And, for me, I think it's trying to make that actually true, make the reality of how I feel true to the perception that maybe others have of me as the boss, and making that distance shorter and shorter.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this, put it over here.
Not cool. Not cool. All right. I will concede. I can see you've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is my kitchen table and also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing. While I watch your interviews, I know how to do some interviews. I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said, fine. I didn't negotiate with him. I did no due diligence.
I have something I'd like to sell and how they stay there. You don't feel inadequate now because being only the second wealthiest man in the world. Is that right? Dan Doctoroff is a former deputy mayor of New York City and a former CEO of Bloomberg. I came to know Dan reasonably well a few years ago when he created Target ALS, which was designed to raise funding to help cure ALS, a disease which killed his father and his uncle. Recently, sadly, Dan was also diagnosed with ALS. I sat down with Dan at Bloomberg recently to talk about his life, philanthropy, and his desire to now do what he can to help cure ALS. Dan, recently, about a year ago, you were diagnosed with ALS, which is a very sad, tragic disease. What was your reaction when you heard about this?
Well, I was actually shocked, despite the fact that my father and uncle died of the disease. And I didn't expect it at all. I really hadn't felt many symptoms, but I went away on a trip to Iceland with my wife, and I had breathing problems, and I couldn't climb rocks. I got exhausted climbing hills, which is really weird because I was in pretty good shape. And so I decided to go see a doctor, not thinking it was ALS. And he noticed my muscles twitching and brought in the head of neurology at the hospital that I went to. And he almost immediately declared I probably had ALS, given my family history. So then I reached out to other doctors who I knew in the ALS field, and they basically confirmed it with a series of tests.
But your father, who died of ALS, and your uncle, who died of ALS, they had a gene which is kind of an ALS gene. You had earlier been tested for that gene years ago, and you were told you didn't have it.
No, I had never been tested. I never wanted to be tested because I didn't want to have to tell my kids if I tested positive. So everyone sort of assumed I had ALS based on my results and my family history. But when the genetic testing came back, I did not have the same genetic mutation that my dad and my uncle, and by the way, their first cousin had. So it's throughout my family, but I didn't have the gene, which has happened like 5 times in history.
So for people who were not familiar with ALS, it first became well known to the public when Lou Gehrig, the famous baseball player, contracted it and died relatively quickly thereafter.
Right.
He was in his 30s, I believe, at the time. Since that time, since the 1930s, have we made that much progress in diagnosing or treating ALS?
So there had been virtually no progress for 140 years from the time it was discovered in 1870. My uncle died in 2010, and in 2010, I decided, look, in my family, it's hereditary. My dad had died in 2002. I got to do something. And so I hired a team of scientists to understand why there was so little progress made in the disease. And we came up with a set of theories and created an organization around those theories that included, funding of consortia, funding of core scientific resources that anyone in the world could draw on, bringing in biotech and pharma into the process. And there's been an explosion of progress over the last 10 years. I'm really proud that that organization, Target ALS, has played a major role in catalyzing the progress.
Now, when you were told recently that you have, about a year ago, ALS, you didn't say, I'm now going to just take life very easy. You decided you're going to go raise another $250 million for Target ALS. Why did you say you wanted to put the energy and effort into that, knowing it probably really wouldn't help you?
Because, first of all, this affects my family. Even though I don't have the same genetic mutation that my dad and uncle did, I may have another genetic mutation that has not been discovered yet. My cousins, my brothers, might have ALS. So it's very personal for me. But the other thing is, and most people don't recognize this, 1 in 400 people who are alive today will die of ALS if we don't come up with treatments. And so Target ALS has been amazingly successful over the last 10 years. And I thought there was nothing more important that I could do than to scale up Target ALS and hopefully see real treatments that save people's lives within the next 5 to 10 years. And hopefully we'll be at a point within 10 years that we can see a day when everybody's lives get extended and saved.
A number of years ago, there was a so-called ice bucket challenge, in where I think people were having water dumped on their heads, and it was designed to raise money for ALS. And I think it did raise a fair amount of money, over $100 million. But that was not for research. That was for care of those who already have ALS. Is that right?
Some of it went to research, but most of it went to patient care, which is important. I mean, this is a devastating disease. What happens in ALS is the signals that get sent from the brain to the muscles to move die. And when that happens, people get paralyzed. And it's just a progressive disease where you lose more and more control. So patient care is really important. We have to always find the right balance between patient care and research, because at the end of the day, the thing that is going to save the lives of those 1 in 400 people is treatments, and we need a lot of effort to actually come up with effective treatments.
Now, today, we still do not know what causes ALS. Is it a genetic thing completely, or is it environmental, or is it some combination? What do we really know about what causes ALS?
Well, there are certain genetic causes that we know are responsible for ALS. But that's only about 10% of the cases. The other 90%, we don't really know. We know now what the biological pathways are. So we have a much better understanding of the science, and that is leading to potential treatments. But the really understanding the cause, I think we're still got a long way to go.
You know that within 3 to 5 years, it's more likely than not that you will not be alive. So how do you deal with that every day when you get up?
I have been in an amazing mood ever since I've been diagnosed. I stopped thinking about the future.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Talk about a little bit more about ALS in a moment. Let me talk about your background. Where are you from?
I grew up in Birmingham, Michigan, a suburb of Detroit.
Okay, and your father was?
My father was a lawyer who became the chief judge of the Michigan Court of Appeal.
And at what age did he contract ALS?
66 years old. My mother, who was a psychologist, had just died of a rare neck cancer at 64, and literally within weeks of her dying, he started to show symptoms that would later be diagnosed as ALS. He started to limp, basically.
Now you are what age now?
Not today, I'm 64.
So about the same age as your father?
A little bit less.
Where'd you go to college?
Harvard.
And what did you study there, and what did you want to be?
I didn't know what I wanted to be. I studied government because I didn't know anything better. But my biggest achievement in college was meeting my wife freshman year. We've now been dating or married 45 years. So that was my biggest achievement in college.
Big achievement. So after college, you went to law school at the University of Chicago?
Before I did that, I was a political pollster for a firm called Market Opinion Research. And I'd be flying all over the country as a 22-year-old, advising candidates. And the fact that they listened to me discouraged me so much that I decided to go to law school.
The fact that they were listening to a 22-year-old made you nervous. Okay.
Yeah, exactly.
All right. So you went to law school at the University of Chicago, and what did you do after you graduated?
I went to work for Lehman Brothers.
So you were an investment banker?
Yep.
And how long did you do that?
3 years.
And then you went into the higher calling of private equity, right?
To the firm that became Oak Hill Partners.
Okay, and so you did that for how many years?
14.
All right, so how did you become close to or get to know Mike Bloomberg?
It's actually a funny story. So back in 1994, I was sitting in the stands of the World Cup semifinal game out at the Meadowlands in New Jersey. It was Italy versus Bulgaria. A friend literally dragged me to the game. I didn't want to go. It was like 100 degrees. We took the bus. It took forever. But I walked into the stadium that day, and I thought it was the most amazing sporting event I had ever seen. Everyone was painted in Bulgarian and Italian colors. You couldn't sit down. So I was standing there through the match, thinking to myself, you could play this game in New York with any two countries in the world, and it would feel exactly the same. And then I started thinking about the Olympics, which I'd always been a fan of, and saying, why has the most international city in the world never hosted the most international event? And I left the stadium that day with this vague notion that New York ought to host the Olympics. And so I built a plan with advisors about how New York could host the Olympics. And eventually I showed it to Mike Bloomberg. When he was running the company, he wasn't contemplating running for mayor. He gave some money, he went on the board. And then when he shockingly won to be mayor, he asked me to join him in City Hall.
And what did you do at City Hall for Mike Bloomberg and the city?
So I was responsible for everything economic and financial. So my title was Deputy Mayor for Economic Development and Rebuilding. First task was rebuilding the World Trade Center site. But then we really rethought the future of New York physically and financially by having a 5-borough economic development strategy.
Now, after serving as deputy mayor of New York for development and other projects dealing with economic development, you left after how many years?
I was there for 6 years, and then Mike Bloomberg, we sat in this bullpen in City Hall. It was an open space, and I sat basically behind him. One day, he wheeled around, and he said, what would you think about going over and running Bloomberg? And I said to him, what are you talking about? In the 6 years that we have sat here together, we have discussed the company for 1 hour total. And he said, no, I think you'd be really good. I'd never run a big company before. I didn't know anything about Bloomberg. When I was in private equity, I was a light user of Bloomberg. I knew one person at the company, and he said, no, I think you'd be really good. So I said, okay, I'll think about it. So I came back the next day, said, okay, I'm going to do it. But I'm not going to do it for the same salary I was getting paid in government, which was $1. And I started about 6 weeks later. And after it was announced publicly that I was going to go run Bloomberg, I said to Mike, okay, I'm doing it. What do you want me to do? He said, I don't know. I haven't been there for 6 years. You go figure it out. And I did.
So how many years did you run Bloomberg?
7.
7 years. And the company grew pretty nicely during that period of time?
Yeah, I mean, as soon as I got there, the financial crisis happened. But we grew from, I think, $5.4 billion in revenues to $9 billion in the 7 years that I was there.
After Mike finished his 3rd term as mayor, he came back and resumed the position of being CEO. You left the company and you started another company called Sidewalk Labs. What was that?
That was a company I formed with Larry Page, and Google became Alphabet, that was focused on urban innovation. And what we wanted to do was build the most innovative place in the world, but also by focusing on building a place, develop ideas, urban innovation ideas that could dramatically transform the cities.
So you're running that company, and then when you got the news that you had ALS, you decided, I'm out of this, I'm going to go devote myself to target ALS, is that right?
Basically, and I'm on the board of a couple of the companies who we created. But yeah, my focus was definitely on ALS. And, you know, I also wanted to spend much more time with my family, with friends, travel, do things that I'd always wanted to do. And it's actually worked out amazingly well.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro at the RBA Front and Centre.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
How do you think New York City is doing today? Mike Bloomberg is no longer mayor. There's been a mayor after him, and now we have a new mayor, Eric Adams, in New York. You think New York is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising New York City?
The mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that. Well, that later this fall we'll produce the report that hopefully, will be pretty inspiring here and in other places.
One of the other projects you conceived of is the Shed, and you were for a while the chairman of it for a long time. You got it off the ground. What is the Shed?
We wanted to put a cultural institution on the far west side of Manhattan. And so what we decided to do was create a new kind of a cultural institution that would be remarkably adaptable. The spaces could be adapted to anything. They could accommodate virtually all forms of artistic expression. There's many different venues in it. The building literally moves back and forth. It is so flexible. It's sort of an architectural marvel. And I'm really proud of it.
Now, perhaps the most famous person who had ALS was Lou Gehrig.
Right.
And of course, some people still call it Lou Gehrig's disease. But another famous person who had it was Stephen Hawking. And he lived for some 30-plus years with it. How do you explain that sometimes people can live for 30 years plus?
A couple percent of people live beyond 10 years. One of the decisions that I'm going to face, because my major symptom is respiratory, and that's why people ultimately die, is to get a tracheostomy, which means that you can't breathe independently. You also can't eat, and you also generally cannot talk. So you communicate by looking and spelling out words on a computer screen. And, a lot of people don't want to live that way. I think I probably would. I want to see my grandchildren grow up. I still think I could be engaged in things. Again, that's sort of my optimistic nature, that it's not just about believing there's a cure, but it's sometimes about believing that the better of two bad alternatives is something worth doing. So, if faced with that choice, I think that's what I would do. And, I'll need a lot of help, but fortunately I can afford it.
Now, the word progressive is a word used for ALS and other diseases as well. Progressive is a euphemism for it's never going to get better, it's going to get worse. So progressive in the case of ALS means you're going to die much sooner than you would otherwise die.
Absent some sort of miracle progress, which I don't really expect, for 80% of ALS patients die within 3 to 5 years.
Many people, when they face death and the certainty of death, and everybody's going to die at some point, but people generally think it's way down the road or over the horizon. You know that within 3 to 5 years, it's more likely than not that you will not be alive. So how do you deal with that every day when you get up?
You know, the interesting thing is, I have been in an amazing mood ever since I've been diagnosed. I've had maybe 1 down hour cumulatively in the last year. And I've got many theories to try and explain it. The biggest one is when I was diagnosed, I stopped thinking about the future. It was not something I tried to do. I think it was sort of my optimistic nature protecting me. And it's not like I'm in denial. I know the statistics. I spend lots of time with ALS patients. I've lived with it with my father, my uncle. My college roommate died of ALS. So I know what's going to happen. But I stopped thinking about the future. And that has been just an enormous benefit for me. I have a lot of other theories to explain why I've been so unfazed by the disease, why I've been so happy. That includes, I've had a great life. I have a wonderful family. I've got great friends. I've done what I wanted career-wise. I've done outside things like the Shed or the Olympics that I wanted to do because I was passionate about them. I've had a great life, and obviously I want it to continue, but if it doesn't, I'm grateful for the life that I've had. And then, you know, I've been bathed in sort of like the love and support of so many people. When I announced that I had ALS, I got thousands of notes. You know, lots of people talking about the impact that I'd had on their life, et cetera. I literally felt like I died and witnessed my own funeral. But then the last part of it is, I feel like I've got purpose. With Target ALS, I feel like I can contribute to saving people's lives, maybe my own, unlikely, my kids, my family, but those 1 in 400 people, and there's nothing more important than that. So I feel like I'm on my last mission, and it gives me a real sense of purpose.
And you're one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, so the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Welcome to Bloomberg New Economy, lighting a path through the storm. I'm Eric Schatzker. At this year's New Economy Forum here in Singapore, we confronted the world's most pressing challenges, developed action plans to meet them, and explored the possibilities beyond. It was a journey from reckoning to rebuilding to revival. Over the next half hour, I'll bring you the highlights from those 3 exceptional days. Our dynamic and distinguished speakers had much wisdom to share as we emerge from the pandemic, and creative ideas for tackling the burdens of inflation, the misery wrought by Russia's invasion of Ukraine, the dangers inherent in rising U.S.-China tensions, and the wreckage left by scandal after scandal in crypto. Let's begin with Catherine Tai, the Biden administration's U.S. trade representative. One of her priorities is building a new network of economic security ties here in the Asia-Pacific region.
Going into 2023, we are extremely excited. There is a framework that we've created for innovation to create a 21st century framework for 21st century challenges that include very disrupted supply chains and a global economy that is really searching for the opportunity to rebuild confidence, to demonstrate sustainability, resilience, and inclusion.
Do you have any specific proposals that you'll bring to the table when you meet?
Yes, so the Indo-Pacific Economic Framework is not a traditional free trade agreement by design. Trade is one component, but not the only component. So this is economic engagement that includes trade and that goes beyond trade. So we have 4 pillars. First pillar, trade, led by USTR. Second pillar on supply chains. Third pillar on infrastructure and decarbonization. Fourth pillar on tax and anti-corruption. So within the trade pillar, I can go into the components. I think we've got somewhere around 7 to 10 different components. Some of them are quite traditional trade issues. And again, everything is scoped to address resilience, sustainability, and inclusion. So trade facilitation, which is about facilitating the movement of goods across borders. Something that we call good regulatory practices. And as you can see, in terms of naming trade topics, we don't win any awards for marketing or jazziness, but tremendously important in terms of regulatory practices, transparency, notice and comment processes, but also all important disciplines around labor and worker protections, environment sustainability, and the digital economy, which is a novel and emerging area that, frankly, all of the counterparts I talk to are focused on the opportunity that we have right now to be shaping cooperation mechanisms and rules.
We have been a consistent advocate for America to strengthen its economic cooperation and put meat on the framework of the Indo-Pacific Economic Framework, which they have introduced and implemented. It's a framework now, but it needs meat. And that means looking at each of the pillars of cooperation and pursuing concrete projects. And it is happening. The ministers have been meeting for 1 or 2 rounds, and I think there are some concrete projects that are being discussed. So it is promising, and there's something on the table. It's not just talk.
Can the world still rely on the U.S.?
No. It's
okay,
short
that's
answer.
brief.
The short
Okay.
answer. Look, I think the most salient fact of the Trump presidency for allies and adversaries alike is that it happened, right? Which means that everybody around the world, whether you're in Berlin or Singapore or Ottawa for that matter, you have to plan on a much more inwardly focused United States, and not in the way that we've gone through these cycles before.
I agree with you that the salient fact about the Trump administration is that it happened. I am also enough of an optimist to believe that we learned something from that, and that we will build on that. So I would like to believe that we are still a reliable partner, but I think dependence is misguided.
The world now faces a big challenge of defining for itself what its objectives are, and not to be driven entirely or largely by the pressures of the moment. And the goals that I've outlined seem to me attainable. They will be more difficult in the case of Russia than in the case of China, because the basis of a conceptual dialogue has not yet been laid. And that should be the task for our leaders in the period ahead of us.
As I said, if Russia does another referendum, pseudo-referendum that is not acknowledged by anyone in the world, if they acknowledge our territories as their territories, the leader with such position will not be acknowledged by us. Me as a president cannot have any negotiations with him. That's what I said. And they conducted the referendum, and I said there's no point of talking to this person. There's no point. He will not change his policy. This is the occupying policy. He's talking about peace, just like he said, just during the G20, and on that same day, with this audacity, he launches 100 strikes against Ukraine. What can we talk about? Putin is not one person. These are several people, and there's nothing to talk about with these several people today. If tomorrow they are prepared to take the peace formula, if they are ready to withdraw from our territory, deoccupy Ukraine, and acknowledge that this is a tragedy and not just a mistake, that this is a tragedy of them being aggressors. If they are ready to compensate, as it is prescribed in the peace formula, if they're ready to accept it, only then we can start thinking about talking to this group of people.
Coming up, more from Singapore, including my conversation with Ken Griffin, the founder and CEO of Citadel. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
Welcome back to Bloomberg New Economy, lighting a path through the storm. On day one of the New Economy Forum, I had a chance to talk with Ken Griffin, the founder and CEO of Citadel. His thoughts on crypto and the FTX debacle drew a lot of attention, and you're about to see why. We've gone this far into the program, and nobody's talked about crypto. You and I have had a long-running conversation about cryptocurrencies, and every time you were critical of crypto, remember the time you described it as a jihadist call against the dollar? You were pilloried by the crypto faithful. And of course, when Citadel started a crypto trading business, they celebrated your supposed capitulation. So that's the scene setter for the question, folks. What I want to know from you, Ken, is what do you make of the spectacular collapse of Sam Bankman-Fried's FTX?
Well, okay, so big picture, the crypto market cap today is a fraction of what it was when we first started talking about it. So crypto's not front
It was
and
$3
center.
trillion, and now it's well under $1 billion.
It's like 800 billion, of which a big part of that's stable coins, right? So you really move back into a world of Bitcoin and Ethereum as the two dominant cryptocurrencies, both of which actually happen to be CFTC regulated. Look, FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
But was the fundamental problem that it was a business built on cryptocurrency to begin with, or that it was a business that wasn't adequately regulated, or that it was a business that the venture capital and other investors who put money into FTX didn't adequately, diligence? What's the fundamental problem?
Well, I think the fundamental
Or was it just fraud?
So first of all, that's a really big choice of words to use, and I can't go there at this point in time. What we do know is the balance sheet shows a giant black hole. And there's no doubt that customer assets were used to make investment decisions in favor of FTX's shareholders, which didn't work, at the expense of the customers. That's not permitted in American broker-dealers. You can't just use your customer assets to go engage in proprietary trading. That's a huge no-no.
It's a no-no in most parts of the world.
It's in most parts of the world, and that's a good no-no, to be clear, too. All right? So FTX, billions of dollars have been lost here. The confidence, though, of a generation in financial markets has also been shaken. And that's really awful because the 20-some-year-olds to 40-year-olds who are so engaged in crypto, they've got to save for their retirement. And if they don't believe or trust in financial markets, this is a huge problem. They need to own stocks. They need to own corporate debt. They need to partake in our global capital markets. Now, with FTX, there are a few points here that we should talk about. The turf war by American regulators has got to end. It's just preposterous that, without naming the agencies, they all dance around who owns what, and the bottom line is American investors have really gotten hurt here to the tune of hundreds of billions of dollars in decline in market cap in crypto over the last 2 years. I mean, that really strikes at the entire core or essence of what's investor protection all about. The second is that FTX crosses into a zone that all of us are worried about. On the balance sheet of FTX is a line called Trump lose. And Sam was the second biggest donor to Democratic candidates.
I'm going to leave it to everybody else to draw their own conclusions about what you're saying here.
Right? Those are really, really ugly facts when you see a fraud of this magnitude having played out, and you find no regulators were there to prevent it.
I mean, the crypto industry has been cut to ribbons this year. I think it peaked last November, $3+ trillion. It's just around $800 billion right now. And so what should the industry do to survive and make itself better? My opinion is more collaboration. But the problem with the industry is there's a lot of young people that like antagonizing each other
on Twitter
and lighting each other up on Twitter. And you and I were talking in the green room. I had an old boss at Goldman. He said, your job is to take your 6-shooters and point them out to the enemy. Don't point them on each other. And we do that in this industry, and I think it's a shame. And I think if the industry really wants to grow up, we need a lot more collaboration. I think that there was a red flag, sort of a penalty flag of Sam going after CZ, but also CZ going after Sam. I mean, there was a Twitter spat between the two of them. I think it would be better for everybody if we just sort of calm things down and row in the boat together in synchronicity as opposed to taking the oars and smacking each over the head with the oars.
Without a doubt, there are significant segments of the financial market that live in the shadows, that are not well regulated. We call them non-bank financial institutions. And that is where we are likely to be surprised. And that's what happened in the UK. So as our Global Financial Stability Report showed, that when you do a global stress test for the banking system, advanced economy banks are quite resilient to some very serious downside scenarios. Emerging market banks, less so. So in a very severe downside scenario, which is in the GFSR, we have about 30% of emerging markets who breach minimum capital requirements. So that's a pretty serious event. But I think the real unknown is the non-bank financial system. And that's exactly where we have hidden leverage, where we have, dark corners which come up only when things get really difficult, like we saw in the UK. So that's something that we are worried about. More generally, in terms of the financial conditions at the moment, we see a distinction between, investment-grade assets, which everywhere around the world, but the spreads are quite low. You haven't seen much movement there. But if you look at frontier markets, that's where you're seeing a lot of stress already. We have about 60% of low-income countries that are already in high debt distress, and about 25% of emerging markets. Now, that does not make a systemic debt crisis, for sure. But again, we're in very risky times. Like, the war is not over, the pandemic is not over, and we haven't won the fight against inflation. So interest rates may need to go up much more than any of us would like it to, and we have to see what happens then.
There is a fundamental change, and I think it requires that we look at the issues through a lens that is not driven by forecasts, but by an appreciation of risk and uncertainty, except that the world is uncertain. The central banks misread the signs, or I should say, bet on the wrong side of that range of possibilities a year ago. They misread the risk of persistent and much higher inflation. And the price we now have to pay for that is a recession. The price you have to pay for now accepting that there's a serious risk of persistent inflation and stubborn inflationary expectations is you have to go through a recession. That's the price we pay. But fundamentally, it means that whether it's in central banking or other areas of economic policy making or corporate decision making, that we have to look at the world fundamentally through the lens of uncertainty, accept that things may pan out very differently from what we hope for, and don't just bet on the upside. Don't bet on what we hope to see. Anticipate what can go wrong, prepare for it, try to prevent things from going wrong, and that means a different fundamental orientation. It means investing in advance, not waiting for crises to occur, but investing in advance.
Coming up, more from the New Economy Forum in Singapore, including the CEO of TikTok. Stick around to see Shou Chew explain data safety for his popular but controversial app.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Be
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
Welcome back to Singapore and Bloomberg New Economy, lighting a path through the storm. I'm Eric Schatzker. Elon Musk's takeover of Twitter has dominated the landscape in social media lately. But there's another, more popular app that has attracted scrutiny of its own. TikTok is developing protocols to address U.S. national security concerns. Here's TikTok CEO Shou Chew.
In the future, we are building a very rigorous and robust new model. This is pioneering. And we have internally named this Project Texas. And the way this is going to be done is that we're going to move the data that we store in Virginia and in Singapore into Oracle's cloud infrastructure. That's our partner. Oracle is going to look after it for us. We're going to have new and improved data access protocols such that only an entity of U.S. residents that in the U.S. will have access to a certain set of U.S. protected data. So that's the setup that we're going to have. It's unprecedented. No company has attempted this. It's extremely expensive and difficult to build, but that's the project that we're undertaking at this point.
Almost all of the major screw-ups that we've seen very publicly have been a failure of governance. You know, a lack of a proper board which holds the founders to account, often a lack of, scrutiny around secondary transactions, related party questions. And so I think in a very hot market in the last couple of years, there were certain people, investors out there who were pushing the boundaries in terms of, no governance whatsoever, extremely founder-friendly terms, which, they position as helping the founders. But frankly, actually, most founders, the average age of our portfolio company CEOs is 30 years old. And so you want to have some checks and balances.
I think public market prices are so attractive right now that I'm sure a lot of people in the room even have FOMO about not investing.
Well, some of them have FOMO and some of them have already run for the hills.
Exactly. I would venture to say some have FOMO.
From Beijing's perspective, right, those bans represent not responsible competition, but an existential threat.
A stranglehold.
A stranglehold, exactly. And so, I think one of the critical risks here with these export controls is that China calibrates its response based on the perceived threat, which is existential. And so I think that's one of the factors raising the uncertainty and the factors raising the risk for the international community.
So I think that there will be impact, but the thing that you have to realize, China blew up $50 billion of investment in two semiconductor groups in the last 2 years, Wuhan Semiconductor and Tsinghua Group. Those were self-inflicted wounds. So I still think the self-inflicted wounds made in China 2025 wasn't the greatest idea to publish that in 2016. And they weren't ready for this. And again, the U.S. could have taken the annihilation approach and really hammered them. And they chose not to. That was a very conscious choice not to do that. I think China, with the corruption in semiconductor investments and the things that they're going through, I think they've set themselves back more than this particular program will set them back.
The advance toward modernization for the 1.4 billion Chinese people will also bring greater development opportunities for all countries. We will continue to deepen high-level opening up. Opening up is China's basic state policy. Hence, China will stay on the course of economic globalization, take more proactive steps to expand and deepen opening up in wider areas, and steadily advance institutional opening up in rules, regulations, management, and standards. China will uphold the security and stability of global industrial and supply chains and work to build an open world economy that delivers benefits to all. We will unswervingly follow the path of peaceful development. Upholding world peace and stability is in the fundamental interest of the Chinese nation. And it is a basic attribute of socialism with Chinese characteristics. China safeguards and promotes world peace through its own development. No matter what stage of development it reaches, China will always stay committed to the principle of equality of all countries, regardless of their size, strength, or wealth. China will never seek hegemony or engage in expansionism, and will always stand up for justice and oppose bullying acts. Dear guests, China and the United States, as two major countries, both stand to gain from cooperation and lose from confrontation. It's both incumbent and imperative for the two countries to explore the right way to get along in the new era. Yesterday, President Xi Jinping and President Joe Biden held their first face-to-face meeting and had strategic communication on China-U.S. relations and other topics of mutual interest. We hope that the U.S. side will work with China in the same direction, uphold the principles of mutual respect, peaceful coexistence, and win-win cooperation, and bring bilateral relations back to the right track. This will benefit not just the two countries, but also the world at large.
That's all from Bloomberg New Economy, lighting a path through the storm. You can find the full interviews and panel discussions from the New Economy Forum at Bloomberg.com and on the Bloomberg Terminal. I'm Eric Schatzker. This is Bloomberg.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
At Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, violent protests at Apple's main iPhone plant in China. The latest on the Bloomberg scoop that could impact sales ahead of the holiday season.
Plus, Sam Bankman-Fried says the FTX empire quickly went from $60 billion in collateral to $9 billion, according to an apology letter to staff. More on that and how SBF got his start on Wall Street.
And Elon Musk is having second thoughts about that moderation council after saying activists broke the deal. More on that and Musk's new trend of quoting, well, himself. Meanwhile, though, let's check out these markets because had a bit of risk on. Another second day of trading in the green. S&P up by 0.6%. The Nasdaq actually up almost a percentage point. This all comes after the Federal Reserve minutes that came out at 2 p.m. today. This, of course, giving the meeting little tidbits from what was being discussed. And the key takeaway, Ed, is that maybe most of the people at the Federal Reserve right now don't think that we should be hiking at a pace of 75 basis points and into infinity. They do think that we're going to slow down the pace. We do think, therefore, maybe a peak in terms of this rate hike cycle and indeed, therefore, inflation. We're seeing also the riskier assets like Bitcoin getting a bid, but currently flat on the day that we know the change of time is what happens here. But 16,473. Notably, though, volumes are very low on Bitcoin. In fact, volumes are thin everywhere as you've got a holiday shortened week, but a 3-month low for Bitcoin. And flip it on a gear, because also what's at a 3-month low? The VIX, the volatility index, the fear gauge. We are seeing perhaps some muted volumes there and maybe just a little bit of, well, overall lack of concern that really isn't evidenced by what we all talk about in the media, Ed.
Yeah, I want to go straight to the private markets, Caroline, and a Bloomberg scoop about Tiger Global. According to sources, Tiger has written down or marked down its private investments 24% this year, almost a quarter. Of course, we know about what's happened with valuations in both private and public space. If you look at some of the names, Stripe, FTX, Instacart, those whose valuations have come down. Well, now Tiger Global, according to sources, feeling the impact of that across private and public markets, losing or marking down assets by about $42 billion. According to our Bloomberg scoop. Incredible reporting from Hema Palmer and team. Going to the public markets, interesting day, very news driven here in the United States. The first name that we're talking about, Autodesk, worst performer on the NASDAQ 100. We're going to talk to the CEO later in the show, but they cut their outlook for billings, and we want to know why. Cooper jumping by the most since 2016 when it went public, up almost 30%. Another Bloomberg scoop. According to sources, Vista Equity Partners has opened talks to acquire that software name. Tesla, finally, Tesla rebounding in what a way, almost 8% higher after just ongoing declines in that stock. A number of names in the market saying the sell-off in Tesla was overdone, including Morgan Stanley. Well, the market thinks so too. And lastly, Apple, interesting, closing up 0.6%. The big report overnight, protests at that factory in Zhengzhou, the key production site for the iPhone 14. I know we're going to get into that story, Karen.
Let's do that right now because we want to dig into what happened at the main iPhone making plant in China. As you say, Ed, hundreds of workers clashing with security personnel after almost a month under tough COVID restrictions. We're pleased to say Bloomberg's own Ian King is here for more details. And Ian, you follow Foxconn in particular. And, well, had this been anticipated? What sort of an impact does this have on the output and the production as well as the people?
Yeah, I mean, from an Apple perspective, this is not entirely surprising given that we've seen increasing pressure in China, you know, people essentially fighting back, being sick of these COVID lockdowns. So for Apple, this isn't surprising, but it's also kind of worrying that this is an escalation, that we're actually seeing some form of open protest and open resistance to these rules. And you know,
if you take Foxconn's word for it, everything's okay now, don't worry, it was just a dispute and we'll deal with it in the contractual framework and everything will be fine. But in the overall context of what's happening in China, you know, the videos that some of our colleagues were able to take a look at for us and get hold of are very worrying.
Ian, you cover a broad range of technologies for us at Bloomberg, principally the chip sector, but also kind of supply chains more broadly. This is like really difficult for Foxconn, but what does it mean broadly about US-China relations? Because technology is basically at the heart of that conversation, right?
Yeah, 100%. I mean, you've got an escalating trade dispute between the world's two largest economies, and what's being used by the US as its chief tool to attack China or to hold China back is technology and semiconductors in particular. So you have this escalating dispute, but at the same time, that part of China is an absolutely crucial part of this diverse, wonderful, call it what you like, complicated supply chain that spans the globe. So much of the world's electronics economy goes through that part of the world. If we can't rely upon that, if there is going to be increasing difficulties of doing business there, then there has to be some huge changes. And those changes, at least for investors, are going to mean initially huge amounts of costs and a lot of time probably to relocate some of those factories and some of that, you know, expertise that exists there.
One to watch, no matter who you are, from a personal perspective and indeed from an investor perspective. Ian King, thank you for taking some time with us today. And let's continue this conversation. Let's get the investor perspective. I'm very pleased to say that Anne Berry, managing partner and founder of Threadneedle Ventures, is with us, an investor in Apple, also an investor in Disney and Amazon and Meta. So many conversations to be having with you, Anne, at the moment. And let's just talk first and foremost about the Apple conversation. How worrying is this sort of violence erupting? One that you'd already braced yourself for, perhaps?
Well, the reason I find it so worrying, Caroline, is this is at least one we know about. Which are the ones we don't know about? So as we look ahead to how we roll out at the end of this year, which has been a very tentative one coming into the holiday season, if more of this is happening across China that we're not aware of, it means we are going to get some more bad news on supply chains as we head into the beginning of the next one. That's what I'm looking out for, certainly in the public markets.
Hey, Anne, this is a really interesting story, right? Why are we concerned about Zhengzhou? Zhengzhou accounts for 4 out of every 5 iPhone 14 Pro handsets made, right? When you look at the stock story, the equity story, are you worried? You know, this is a stock that's fared better than the S&P 500, but it's still down, and there are a lot of voices in the market saying, I'm not sure how impactful this will be in either direction for Apple.
Well, you heard from Ian just the importance of that part of the world in terms of the concentration of chip manufacturing and consumer electronics manufacturing. I think in terms of the impact on the Apple story, the much bigger one has been around global demand. Everyone's accepted that supply chain disruption is going to be par for the course for a little bit longer. The big uncertainty right now is how is consumer sentiment, how is consumer debt going to start to dampen expenditure on discretionary items such as the iPhone, and when is inflation going to abate so that disposable incomes start coming back up again? I think those are the bigger drivers for the Apple story.
And let's delve into that a little bit more, Anne, because of course you do have a wide array of investments and indeed areas that you like to focus on, retail first and foremost as well. Talk to us a little bit about, as we anticipate how Apple products will sell, but how every product will sell in the next few days. What is the consumer looking like to you?
Well, you're really seeing, Caroline, and we've seen this, this isn't the first time. We saw this in 2008, 2009. My background's private equity, and whenever this kind of dynamic came about, we would look to try to find 2 areas of retail to focus on, and including in tech and consumer products that are tech-oriented. Higher income consumers tend to do fine. It is the lower income households that really struggle. The higher income individuals and consumers tend to trade down. We've seen that with Walmart. I'm sure that some of the Best Buy news that we saw where people were bargain hunting, that's your higher income consumer trying to go and find really great deals right now. That's not your struggling household that's really been hit the hardest by inflation, really been hit the hardest by energy prices. So I think we're going to see value retail do very well because everyone's going there, and I think we're going to see luxury hold up when it comes to things like gifting and special holiday season expenditure.
It's really bifurcated, isn't it? And it's painful, as always. The same people seem to get hurt, the same people seem to win. But interestingly, do the same players win? I'm thinking also of Amazon, which you have a big exposure to. This is a company that's become so large in every part of our lives, whether it's the way we consume, the visuals, whether it's about the way we spend. Are they going to do well navigating this environment?
Do you know what I love about Amazon, actually, Caroline? And you know, I've talked about this in the past. I think that Amazon becomes its most innovative and its most creative, and frankly, it's gutsiest when it comes to these kinds of environments. So Amazon really announced that they were going going to be launching telehealth services. I'm sure you saw that. They've been trying to push into healthcare. They bought PillPack. They've been looking at ways to integrate pharma into their prime services. But this is where you see the Amazon stepping back and saying, okay, how am I going to allocate my capital now? It's actually not going to be on consumer stuff. It's going to be in services in places like healthcare. So I think those pivots are actually the strongest indicators right now for where we're going to see longer-term investment trends.
And another huge story of the week, Disney. Bob Iger back, Bob Chapek out. Your reaction, please, as an investor in that company.
Well, I'm going to start as a Brit, since there are now 3 of us here, but I was playing...
The fourth so far, we had Ian too.
Really. So I was playing Take That Back for Good almost as the kind of the jump-off for when I saw that announcement. Look, I think it's very good to have a safe pair of hands back in the saddle. And I think, Ed and Caroline, when you look at what's happened over the last 6 to 9 months, whether it's private companies, whether it's public ones, the businesses that have had bad news, whether it's attrition subscription in Netflix, whether it's been Snap, for example, where we've seen a number of users fall down. Let's go and use that word again, Caroline, bifurcation. The ones that have at least come out with a plan have been rewarded. Netflix. We don't really know if it's going to work in the long run with their ad tier, but they've been rewarded. The ones with no plan, Snap, have been absolutely punished. Disney, to me, is going to be a little bit somewhere in the middle right now. So we've got a trusted, safe pair of hands back in the CEO seat, but we need to hear what the plan is going to be. And until we hear what that plan is, I do think we're going to have some uncertainty around Disney. For the moment, I'm pleased, but I want to hear the details.
Hey, Anne, we're so grateful to have you to wrap the news of the week. But just very quickly before you go, give us the Anne Berry 2023 outlook.
Oh, you know what? I wish I were the bearer of brilliant news going into the Thanksgiving season, but I've been a bit more bearish than some, and I think that's because we're riding this sort of bubble at the moment of optimism that the Fed's going to start slowing down on their rate hikes. But I think this issue of how much the consumer is suffering, not just in the US, also in Europe. I don't think we talk enough about Europe here in the US right now, and the impact. I think we're going to see that filtering through in 2023. So I'm really looking at much sort of safer stories right now, much less discretionary spending. I'm looking at all sorts of investments, particularly on the private side, that are sort of longer-term plays.
Okay, Threadneedle Ventures managing partner and founder, Anne Berry, thank you. Coming up, we'll bring you the latest in the FTX debacle and Sam Bankman-Fried's apology. That's all next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Still the story of the week, of the month, of the year. Let's continue to dive deeper into what propelled the fall of crypto exchange FTX. The founder, Sam Bankman-Fried, apologizing to employees for the crypto exchange's failure. Bloomberg's Annie Massa joins us for more on what we've learned from the bankruptcy hearing again, Annie, and also his own background. First and foremost, what do you make of any sort of apology coming at this point?
That's right. So Sam Bankman-Fried has apologized now in a letter to the exchange's employees, and he sort of said that he wishes that they didn't end up in this place, that he's sorry for what went wrong. I mean, it's up to those employees who have really experienced dramatic fallout from this implosion to decide whether that's enough of an apology for them. But he is still speaking out about what happened and giving his side of the story.
Hey, Annie, if you're new to this story, I have some sympathy because each day a new name comes up. The latest name is Jane Street. Could you explain to the audience the relationship between Sam Bankman-Fried, FTX, and Jane Street?
Sure, there are a lot of players to keep track of, like you mentioned. So Sam Bankman-Fried ran FTX, the now bankrupt crypto exchange, once the second largest crypto exchange in the world. But before all of that, and before this dramatic downfall, he worked at a Wall Street trading firm called Jane Street. And Jane Street is really known for its obsessive focus on risk. And it's a very successful trading firm, and his pedigree and background at Jane Street is part of what helped him get to the level that he got to. It's part of what helped him impress VC investors and people all around both traditional Wall Street and crypto. Jane Street's known for attracting really very high IQ math nerds. It's known for its love of puzzles and games and just for its success, but it's a very stealthy firm. So in our story, we pointed out today that FTX doesn't seem to have brought to bear Jane Street's focus on risk to its own enterprise, to say the least.
Yeah, exactly. I mean, the fact that overall, over at Jane Street, they permanently were trying to learn from previous mistakes, trying to analyze what had gone wrong, trying to keep on innovating and looking at risk. He seems to have done basically the opposite. Many would blame because of the stratospheric way in which the company grew. Some would talk it just messy accounting, whatever they want to be divulging of it. But the bridge that he built between crypto and traditional finance and regulators, how much has that now seemingly been undercut by what he was up to?
Yeah, so he had this background from a traditional Wall Street firm, from traditional financial markets. Jane Street's an enormous player in ETFs. And Jane Street's, well known and very well respected. So he brought this pedigree really to the world of crypto, and it helped ingratiate him and helped make other, investors feel comfortable with him, and helped him impress the rest of the trading world. So, I mean, what's happened at FTX has really boggled the minds of those VC investors, of traditional Wall Street, and of crypto as well. The way that it's unraveled so rapidly, and the intertwined, really deeply intertwined ties between Alameda, his trading firm and hedge fund, and FTX, and it's really shocked everyone in all of those spheres.
All right, just very deep, terrific reporting there from Bloomberg's Annie Massa. Thank you. Coming up, we'll be joined by Autodesk CEO Andrew Anagnost to talk about his vision for the company and how it's navigating a pretty challenging macroeconomic environment right now. This is Bloomberg.